fast. So if you look at the factory worker, the advent of robotics, which we really haven't covered in this report because this is very much focused on AI rather than robotics, is going to sort of act as a headwind in terms of employment in the manufacturing sector. That said, if you're growing capital expenditure across some of these spectrums, so power being one of the very big, or the energy resilience being one of the big themes that we are thinking about, along with, let's say, defense and some others, that can act as a boost to overall employment in the economy. But I would not forget the rest of the services sector or the services ecosystem. Final point: we will be good at predicting what kind of jobs can be automated right now, but the kind of jobs that can come up in the next 2 or 3 years because of the technology revolution is not something that we will really be able to predict. So we'll have to, we are taking that glass half full view of the 3 years to 5 years out.
Shantanu, 3 years to 5 years out. Okay, but in this time frame, and ultimately our audience is primarily looking to invest in companies to ride on that growth. So the question really is, in this productivity gain that you are envisioning, how much of the share of that is going to be for companies in the listed space? Is that something that you've done as part of this exercise?
Yeah, great question. We have not yet, but our sense is that large part of this is right now in the unlisted space. Some of these smaller tech companies are also in the unlisted space, and you're having sort of private capital interest, private equity, private credit interest in those segments. We think that is going to grow at some point of time, come to the listed space. But if you look at the shape of AI, the very top end consumption, what our consumer analysts earlier have called as affluent India, that has seen significant growth. The growth rate is flatlining, but that segment or that cohort sort of remains intact in our view. So some of those segments should benefit. And finally, this is less to do with the AI point, but more generally, if you see the energy shocks that India and more generally the world has been witnessing, we think that energy resilience and energy security across the spectrum is going to be a very big theme. That starts right from exploration to thermal to renewables, solar, batteries, EVs. That whole segment we think is going to be very ripe for capex also going forward.
All right. Interesting times that we live in. You can say that at the very least. Shantanu, thanks so much for taking the time and for speaking to us today.
Thank you.
All right, quick check of where the markets are. Again, don't look at the percentage change for the Nifty 50 at 24,630. We're certainly better than we were at the start of the week, and so that's something to focus on. The broader markets are reasonably okay as well. The mid-cap index just about flatlining at this point, having recovered from the low point of the day, and the small-cap index up about 0.33% or thereabouts. But that brings us to the end of this edition of India Market Open. From Neeraj, Hiral, and myself, and the team that put the show together, thank you so much for watching. Stay tuned. Up next is Ask Profit, and this is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
ये लीजिए भाई, मैंने बनाया है व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है? बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करना अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts?
Hello and welcome to NDTV Profit. You're tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Well, Bitcoin remains range-bound between the $64,000 to $65,000 levels. India's tax authority issues guidance formalizing crypto reporting. And SEC Commissioner Hester Peirce remains upbeat on crypto reforms. Lastly, S&P gives BlackRock tokenized reserve fund top stability rating. Well, the Bitcoin remains in a narrow range between that $64,000 to $65,000, especially on the deadline for the Digital Asset Market Clarity Act to play out. It's very near for the Senate to decide. Volumes actually are on the lower side, and if you look at the volatility, that's also expected to reduce going ahead as well. Consolidation likely if you're following the charts. Well, India's tax authority has issued a 198-page guidance note which requires crypto service providers to collect the detailed user tax data and file annual Form 167. Now, these reports are ahead of joining CARF, which is nothing but Crypto Asset Reporting Framework. It's a global framework, and this aligns India with this global standard reporting framework for the digital assets. So yes, it is sentimentally positive. Also, the Securities Exchange Commission SEC Commissioner Hester Peirce says that US crypto reforms can continue even if Congress fails to complete the Digital Asset Market Clarity Act. That means the regulatory progress continues and is alive while the lawmakers are divided over the bill's final shape. This shows regulatory optimism from the regulator's point of view. And S&P Global Ratings has assigned its highest principal stability fund rating to BlackRock's new tokenized money market fund. The ratings provider cited the creditworthiness of its investments and counterparties, and remember, it's a mature structure. This action gives moral support to institutional participation in the tokenized asset classes. And before we wrap, here's a quick check to the changes to the crypto prices over the last 24 hours. Largely, they have been in a very narrow range. If we talk about Bitcoin and Ethereum, slightly on the positive, but a bit of sell-off in XRP as there is a churn happening in certain crypto. Also, the support and resistance range is much narrower between that $64,000 to $66,000 mark. Well, here's what's there to keep in mind today. The crypto strategy, the market sentiment for the second straight day is cautious but stable. Lower leverage positions are there in the system right now, and you can expect, if you look at the technical charts, consolidation is likely to continue. No major news flows are coming in unless something surprising comes from the Clarity Act. Just 2 or 3 days left for the August recess in US. Bitcoin trade range would be $64,000 to $66,000. That's what you should be noting it down. Also, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome, you're watching Ask Profit here at NDTV Profit. I am Mahima Vashrajani, and with me as always is Puneet Zaveri, and this is a show of course that gets all your stock related queries answered. For viewers who are tuning in by now, I know that you know the drill, but just in case for somebody joining us new, you can either call us or WhatsApp us on the numbers that are flashing on your screen up there. While you do that, a quick look as to how the markets are doing. The Nifty 50 right now is trading almost flat around the 24,600 levels. Let's try to pull up the heat map also and see as to what are the counters that are keeping the Nifty in check and contributing positively. You have Eternal topping that chart up 2.5%. Shriram Finance continues to do very well, up 2.4% as well. Cipla, RIL, Titan, just Titan ahead of the numbers. Tomorrow is when the company posts its numbers, doing well. There is BEL, Sun Pharma, Apollo Hospitals also doing very well. SBI also, in fact, numbers expected tomorrow doing fairly well. But on the flip side, you have something like a Trent just ahead of the numbers. We've seen that the business update was not very positive. Today is when it's expected to post its numbers. It's down almost 2%. Power Grid, ONGC, NTPC, Hindalco are all trading in the red. Hindalco, of course, we post the various numbers. Not much of an action actually per se there. Let's also take a look at the Nifty Bank. It's around the 57,800 levels. I think the next 58,000 levels is something that we will be watching out for the Bank Nifty. But the broader end of spectrum, the mid cap 150 is almost mirroring Nifty 50, just up by about 0.08%. The small cap 250 slightly doing better, up by about 0.3%. Though come off from the day's high point, but doing better than the benchmarks and the mid cap 150. Let's also pull up the BSE 500 and see as to what are some of the names that are doing fairly well. You have something like a Naveen Fluorine on the back of strong Q1 numbers doing very well. There's something like, so in fact the defense pack as a whole is also doing very well. You have HAL, you have Mishra Dhatu, etc. doing fairly well. But on the flip side, you also have something like a Sheela Foam, PNC, Influx, etc. That continue to be under pressure. But let's start taking all your stock related questions. And today, of course, being Thursday, we have Kushpura with us in the studio, and we're also joined by Tapan Doshi, research analyst at Tapan.in, joining us now. Welcome to both of you gentlemen, and a very good morning to the both of you. I'll start by taking the first question. In fact, before I do that, Kush, I'll quickly come to you. In terms of it's been now 3 days in terms of how we've witnessed CAS, right, in closing. But your quick take on how today things could pan out, considering that it's also expiry, because it's going to be a scary one today.
First of a very good morning. And I don't know what's scary, it might be a little tricky.
Yeah.
I think I'll be around for the closing show, maybe a portion of it, just to perhaps discuss that, because it's the expiry. So we'll perhaps confirm that. But yeah, I might be around for that discussion also today. I have advised, on Monday, on Tuesday as well, don't be writing call options right now with the way, things are moving. Don't go out and buy also, because we could see some volatility. Let things settle. It's not necessary for you to participate in every big change. So yes, it is starting to settle. We are seeing some divergences, in the Nifty spot and the futures perhaps cool off a little every day. Yesterday, the gap was a little lesser. Perhaps it'll improve today as well, but like I said, let things settle. Don't let your options go into expiry. The STT that you pay on that is higher, the other charges also, plus you don't know how big the change could be and in which direction. So yes, be a little mindful of that.
All right, okay, so that's the view coming in from Kush, but let's start taking your query. The first one that we have is from Aarti, who's writing us from Bengaluru, asking about Electra Green Tech. She's got 8 at the levels of 1198 and wants to know if she can continue to hold this one or sell out and book profits. Tapan, a very good morning to you. I'll come to you on this one. What's the view?
Good morning, Mahima. So if you see the results and all that is for this company has been okay. The outlook is quite good. If you see the e-bus demand is quite good. Again, you can see order execution will be accelerating from next quarter. Capacity expansion is there. Though one thing one has to keep in mind that already the stock has a premium valuation and competition is increasing. But looking at the strong order book, I think hold this stock for a little bit longer.
That view, but let's also look at a couple of key stocks that got listed on the exchanges today. Jupiter Green was one, and you had a mild start in the green for that particular counter. There's also MV Electrosystem that got listed and a very strong reaction it's actually built on. So it opened almost 22% up at almost 520 rupees per share. Now trading at 581. It's an interesting case, this of MV Electrosystems. We spoke to the management. And because they've recorded just revenues of 49 crores in the last year, EBITDA loss making, but they have an order book of almost 19 times of that revenue. So important to get into the perspective of why and how the street is liking this as well. Let's also, and I had a chance to speak to the management, let's listen into what they had to say, especially on this order book progression, as well as what is that the key new product they've developed that the street is liking. Let's listen. We are being now joined by Mohit Vora. He is the non-executive director at MV Electrosystems Limited. Mr. Vora, very good morning to you, sir. Thank you for joining us today. Let me just start off with, with something that is very central to your, to your company, and that's the three-phase drives propulsion equipment that you have been developing. You have an order book for that too. Talk to us about the importance of that product, as well as what it means for the company in the next 3 to 4 years.
Wonderful. First of all, thank you very much for having us on this show. Thank you very much. MV Electrosystems, as you know, is an emerging railway technology company. For the last 5 to 6 years, we have been dedicatedly working on development of this three-phase locomotive propulsion system, which you talked about, you named about. So last year September 2025, we received the qualification after 2.5 years of rigorous inspection, testing and field trials by railways. And recently we have started our revenues from this. 2-3 batches have already been shipped, commissioned, and payments also received. So this is a very important technology, the core part of the rolling stock. Rolling stock means locomotives, EMUs, metros, train sets like Vande Bharat trains or the bullet train. So it is the central or the core part, or I should say it is the heart or brain of a train. So that it pumps the blood in the form of the current or voltage into the motors, and also all the electrical devices or electronic devices in a locomotive or the train continually speak with each other or communicate with each other through this medium. So that is the main nervous system, you can say. So having developed this, we are virtually the first Indian company having developed this kind of IPR for the country. We were largely dependent on foreign countries for the development or production of our locomotives or of our train sets. So having this technology in the country, we can give priorities to our projects which are central to India, central to the country. Indian Railways, as we know, is going through a very significant phase of modernization, very big scale. This ambitious program is nowhere in the world as such. We are talking about high horsepower locomotives, a lot of freight corridors are coming in, the density of the cities are increasing, the size of the cities are increasing, so we'll be needing more number of locomotives and more number of train sets also.
Most certainly. Sir, I just wanted to put in perspective about this particular order as well, because you also have, because when I look at the numbers, you recorded 49 crores in terms of revenue. Now I'm sure based on this approval that you got in last year, this new product is not reflected too much in revenues, but you have an order book, and I think the number that I have is 1163 crore. So the question being, what is the execution timeline of this order book, and how are you seeing that in FY27 and 28 reflecting in your revenues?
Great. So as you rightly mentioned that the future is in front of us. We have clocked the order book, which is generally an annual order book. You need to complete the entire order book within next upcoming financial year. So as such, it is expected from MV Electro Systems to complete this order book within next 12 months time frame, the time when we receive the order. Unlike propulsion system for EMUs or memo trains, wherein you are given sometime 2 to 3 years or 4 years also for the execution timeline. So this is an annual timeline, and that is how we say that we will scale up fast. You will see a significant multiple growth in the company. This was one reason of coming up with this IPO. You will see out of 290 crore.
Well, that was the management of MV Electro Systems. Of course, they spoke about why that revenue has been in that very range around 50-60 crore, but I think it's the future of the company that's more in focus, and I think that's what the street's liking at this point of time too. But let's continue with your stock related queries. This one's coming in on Metropolis Healthcare. Our viewer Sumant has actually bought these shares at 590, so attractive levels that she got into, but wants to know and has been range bound today, coach, despite good results. Wants to know actually the short term view of this counter. What should she do with 170 shares?
No, fairly positive on Metropolis. In fact, if I recall, I had given a call on this about last week or maybe just before, right, with a stop loss at about 567. The stock has a tendency of coming to the 20-day moving average and rebounding from there. Last week, this week, it's already done that twice. It's holding ground. So yeah, there was already a bit of a run up, and hence perhaps the stock is consolidating. But on the whole, if you ask me, the stock has, the primary trend for this one is intact. Now it's very close to the support levels. I don't see a reason for you to exit. Maybe if not 567, you might want to keep a stop loss slightly lower at about 558, 560, just rounding that off, and continue to hold Metropolis.
Okay, so that's the view coming on Metropolis. In fact, we're also going to speak to the management in the second half, so you can listen to that conversation as well. But the next one that we have is coming in on HDFC Bank. Sai Karthik from Dallas wants to know if this is the good time to buy HDFC Bank, and good targets that you can expect on this one. Good or bad, I don't know, Kush, but what is it that you're expecting on the charts?
This is such a difficult one to call, isn't it? I mean, men wiser than myself have tried and failed. Let me still give it a shot, right? 720 to 730, that's the long-term support zone for HDFC. We've seen the stock rebound multiple times from there on. Now, I'm not saying that, this is the area where you buy and hold for the long term. The stock's disappointed on that front multiple occasions, But given that kind of a record, given that even recently we've seen the stock rebound from those levels, I think you can still consider that. I would suggest a stop loss slightly deeper, maybe 700 kind of levels. But yeah, if you want to play for a favorable risk-reward ratio, you can consider HDFC Bank. On the way up, look for targets of 765 and about 795, 800 plus levels also. So risk-reward ratio is favorable right now. We all know momentum is not something that has been going for HDFC Bank.
Most certainly at this point of time, lack of momentum there. But let's go across to Hyderabad now. Ajay, who's dialing in for a stock-related query. Ajay, very good morning. Welcome to the show. What's your query?
Happy morning to all. My query is about Officer Solutions. For 1 month nearly I have been holding this at 305,000 quantity.
Okay.
I don't know about when the results are. Can you please tell me like fundamentals and technicals for short-term period, how this stock is performing?
Got it. Kush, yet again, a short-term query on office. What do the charts suggest?
Not very encouraging, I'm afraid. The stock has been in a downfall after that. Initial bump up it got, from listing went to 950 plus 950 odd levels, and then from there, it's just been, in a steady decline. Right now, it's trying to find its feet. 260, 265 support zone is being acting up, but I wouldn't remain too constructive on this. However, given the oversold nature of the stock, I would say you can hold, keep this 260 level as your stop loss, but as and when you get your buy price or closer to it, you're better off exiting.
Okay, the next one that we have is coming in from Gautam, who's also writing us from USA. Wants to know about two counters, Tapan. He's asking about either AB Capital or IndusInd. Where can he go ahead and invest for the next 12 to 18 months? Where do you think our fundamentals better placed?
Well, I'll go with AB Capital, because still I think IndusInd, of course, the result was okay, but I still feel AB Capital is a better option, quite diversified. AMC in insurance, broking business is doing good. Again, digital lending is scaling for them. Cross-selling is improving. Yes, competition is there, but I think if you see the earlier, the way they were operating now, it's been changed and management is quite positive. So yes, if he wants to go, I think AB Capital will be a better option, a safer option than IndusInd.
Got that view, Tapan. But the next question coming through, and this one's very well capitulated by Shiv Kumar, because he's mentioning about the EV frenzy that's currently going on, and wants to know if it's still a good time to enter Ather Energy at this point of time for the next 1 to 2 years. Tapan, we've seen, of course, almost 4x move in just the last 1 year since the IPO. But how are you looking at this counter? We're going to have a very big capacity coming for the company. New launches also expected this month. How are you looking at this counter now?
Well, great performance now. One of the exceptional performance, but of course, the valuation is too high. Still, EBITDA is, you can see it is negative, but the way they are operating now, I think it will turn positive over the time. But already valuation is taking care of that. Of course, retail expansion continues. Battery ecosystem for Ather is going up. Family scooter launches, new launches are coming. So that is helping them. Strong technology platform is there. Cash position is okay. But looking at the valuation, no, it's too high to enter it. So from my side, I think it will be a buy on this, maybe 15-20% down from here, not at this level.
All right. Okay. So that's the view on Ather. The next one that we have is from Shankar, who's writing us from Bengaluru, asking about Jyoti Labs. He wants to know whether this is the right time to make an entry into this one. He's planning to buy around 1,000 odd shares. And if yes, what could be the target price on this one? Kush, what is the view on the charts?
He's looking for a fresh entry, you said,
fresh
right?
Entry, yes.
Yeah, you know what? This has been on my radar. Precisely for this reason that, the fall from grace has been staggering, to say the least, right? In the sense, 600, odd levels about, 2 years ago, now at about 200. But it seems like the selling is over. I'm seeing early signs of accumulation on this one. Positive divergences also. Stock has consolidated and respected that 190 support zone for a long time. Just purely from that recovery angle and a massively favorable risk-reward ratio, I would say you can consider Jyoti Labs at these, at this price point. If, however, the support zones are broken, then you're better off exiting. So just be mindful of that as well. So yes, buy, at the current juncture, keep your stop losses at 185 strictly. On the way up, like I said, the risk-reward ratio is massively favorable. So about 235, even 260 kind of levels on the cards, once the recovery starts.
Got that view, and most certainly I think that partnership with Henkel not getting renewed took the sheen out of the stock, and hence back in focus now. But Rajesh, who's from Hyderabad, wants to now know between Sona BLW or Lumax Auto, what's a better pick to enter for the long term. Here again, Tapan, similar auto pack, right? It's gotten the EV beneficiary, but for Sona, the last 2 years has been stagnant until you saw the last 3 to 4 months and the up move. So do you feel that there's still a lot more to go now?
Yes, Sona BLW, this outlook is much positive now. If you see the export is quite going again, their margin stability is there. That is the best thing. Capacity expansion is there. Again, if you see the order book is quite healthy, and cash generation is also, cash flow is also okay. Compared to Lumax, of course, that is also doing good, but there is because of raw material volatility, there is a pressure on the margins and all that. I think valuation is much more premium for Lumet. So I'll go for Sona BLW if he wants to go for a little bit longer.
All right. Okay. The next one that we have is coming in on Greaves Cotton. This is from Subabel, who's writing us from Tamil Nadu. Yeah. Here she's got 24,000 shares, bought at the levels of 250, and wants to know whether to continue to hold this for the next 6 months or not. This the price has come down to 202, but Kush, your view on the charts, it's up 3% today.
My God, heavy quantity.
Yeah.
And at an elevated price, right? Okay, so from the near-term perspective, the stock's actually seen quite a bit of fall. The good thing is that the selling seems to be coming, to an end. Also, even with this fall, the stock is still respecting the 200-day moving average, which is at 185. So I would say you can hold right now. It's approached oversold territories, and hence, you could see some sort of rebound. But if 185 is broken, I'm afraid, the dip could be deeper as well. So that's the first thing. Hold with a stop loss at 185. On the way up, look for targets of 225. And then again at about 240-45. May not see your buying price or profits at least, anytime soon. So yeah, on the rebounds, you might want to keep exiting.
Got that view, but let's go across to Chennai now. Lakshmi dialing in for a stock related query. Lakshmi, very good morning. Welcome to the show. What's your query?
Very good morning to you, sir. Thanks for answering my query. So this is for Kushal sir. I would like to ask, what is the best transformer stock to pick this time, and what is the price to enter, or what is the short term and long term view on that?
So you want
Taril or different anything?
Got it. So you have a couple of already. So Kush, which space to enter, and within that space, do you like anything?
Well, actually, this space has been fairly volatile to say the least, right? So I will actually, for now, stay out of it, because even Taril, which was starting to show, some kind of traction, is cooling off a little bit. So I would suggest wait up, somewhat. Even the other names, in this space are starting to see correction, but the recovery has not been as sharp. So I would suggest in this space, wait up for some more time. But yeah, keep Taril itself on your radar. I wouldn't suggest buying right now or getting into this space right now. The momentum or the follow through is missing. The fall has halted. That's a good sign.
Okay, all right. The next one that we have, I think it's time for a rapid fire round now. Tapan and Kush, you both know the drill. Try to keep your answers as short as possible. The first one that we have is on Jio Finance. Our viewer wants to know from a long-term perspective, is it a good buy right now, Tapan?
Yeah, they can buy.
Kush, on PTC India, it's the next counter. Our viewer Somik has bought at 197. You had the results yesterday and that big dividend come through. View on the stock now?
Book partially, hold the rest with about 190 as your stop loss.
Okay, the next one is on Balu Forge. Dilip from Kolkata wants to know as to whether this is if this is a good counter to kind of enter into right now from a long-term perspective. Tapan?
Yeah, but on dips.
On dips, got it. The next one is between JK Tyre as well as Apollo. I think you have the results for Apollo today as well. But what's a better pick, Tapan, for the next 1 year?
I think JK Tyre.
Okay, the next one is on Irida. Vishwanatha Reddy has bought 500 shares at an average price of 179. Should he book his losses, continue to hold, Kush?
Yeah, you can book out. There isn't a recovery, underway in this one.
The next one's on Canara Bank. Our viewer Sanjay is holding shares at 132. Wants to know if he can still continue to hold for the next 1 year, Tapan.
Yeah, please hold.
Karnataka Bank is the other one. Murli from Hyderabad has got 50 shares at the levels of 196. From a 1 to 2 year perspective, good hold. And what should be the target price, Tapan?
Yeah, currently hold, maybe 15-20% growth may be there from.
Got it. The next question is on Bandhan Bank. Our viewer wants to know if it's a good time to enter the stock right now. Horrid results, course, guidance cuts as well. But on the charts, is that momentum similar or as we see in the fundamentals?
Yeah, absolutely. Avoid Bandhan.
All right, the next one that we have is on Bajaj Finance. What do you make of the results is what our viewer wants to know. But Tapan, overall, a long-term view?
Yeah, okay, but wait for the deep to enter.
Okay.
The next question coming in, and this one's on advanced enzymes. Jake from Kochi wants to enter this for the next 3 years. Tapan, any view?
Yeah, he can enter.
Okay, the next one is on BSC. What's your view on this on the charts? Kush, Ritik wants to know.
It's consolidating. You can enter right now. Keep your stop losses about 3300, 3350 levels.
Okay.
The next one is Lemon Tree Hotel. Viewer Abdul Rashad, and he's paying attention because he's mentioning that the results are tomorrow. But is it a good time to enter Tapan before the results, and if not, what to watch out for?
The valuation is okay. I think if result is okay also, I think this is the level to enter. I think this may go up in future.
Okay, Engineers India is the other one. Our viewer Ashok Reddy has bought 600 shares at the levels of 200. Good time to book profits, Kush?
You could book partially. I mean, I don't see a reason why you should ideally, but if you want, you can book partially, but still continue holding on to the rest. 230 is your trailing stop loss.
Got it. The next one's on Sterlite Tech. Sumesh from Kerala wants to know if it's a good time to enter for the long-term Tapan. I think they got an order win today as well. But your view, is it elevated?
Yeah, too elevated. Wait for the dips.
Okay, the next one is on Sona BLW. I think we took a technical one on, I think the fundamental one on this one. Kush, on the charts, what would you recommend? Rajesh is asking this question.
Book profits, buy closer to 750 odd levels.
AKS is the next one. Rajesh from Delhi wants to know for the next 1 to 2 years if he can continue to hold. He's bought shares at 243, so close to the current market price. Tapan, what's your view?
Hold.
Okay, the next one is on Sterlite Tech. A 3 to 6 months view on this one. Raghuram Patra from Bhubaneswar wants to know. By the way, he's also asking about HFCL. Kush, what would you recommend?
No, both of them. If you have, you should continue to hold with trailing stop losses. I wouldn't recommend a fresh entry.
Okay.
Also on GE Shipping, Kush, Dr. Lavanya has bought shares at 1560. Wants to know what's the target and a stop loss that she should watch out for.
Yeah, more of the stop loss right now. 1290, that's your stop loss. If the stock does recover, then you could actually look at 1480 and about 1590, 1600 levels on the rebound.
Okay, the next one is on MCX. This is for you, Kush. From slightly long-term frame, Kunal wants to know if he can continue to hold the 10 shares that he's bought at the levels of 3204.
Yes, you can hold this. A deepish stop loss close to 2400.
Sameer from Gwalior actually is holding on to JK Cement, but at elevated levels. Tapan 7158 wants to know if what should he do? Should he hold, average down, or just sell out?
Sell on rise.
Tata Tech, Rajesh has bought 110 shares at the levels of 886. Short-term view on this, Kush?
You can hold the stocks giving you a breakout. So I would say yes, hold. Keep a stop loss at 750, but yeah, sell closer to your buy price.
Marksons is the other counter for Kishore. And Kush, so he's mentioned that he bought 500 shares at 272 in February 2025. So he's been holding on for a while, and stocks come back to that level now. Should he continue to hold?
Yes, you should continue to hold. Breakout will happen above the 280, 285 mark, and the stop loss on this one 255.
255. Got it. Well, that was the last question of this edition of the Rapid Fire. But stay tuned. A lot more stock-related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
POK के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं.
Welcome back. You're watching Ask Profit right here on NDTV Profit. Before we go ahead, let's take a quick check of how the markets are doing as well, because we've seen consistent moves, of course, since the morning, but absolutely flat at this point of time. Also pull up the Sensex as well. Big expiry day today. We spoke about it in the morning show as well as this one. So we are watching out for a 130-point uptick right now visible on this particular counter, and hence something to watch out for. Also look at the advanced decline ratio, see how that is progressing through at this point of time, and steady state. At least the advances are having a good day today, and let's see if that momentum continues. But also pull up Metropolis Healthcare, came out with good set of earnings today by the company. Stocks not reacting too much, but there continues to be that strong growth momentum as well as guidance to increase margins to 27 to 28% in the near to medium term. But let's speak to the management and get some more perspective. C. Surendran, he is the managing director of Metropolis Healthcare, now joining in. Mr. Surendran, good morning, sir. Thanks so much for joining in. Always a pleasure. Just let me start off with, in this particular quarter, we have seen good growth come through both on the specialty side of things as well as your acquired entity. Talk us through how that margin progression comes through to start with to that 27 to 28% mark. Will specialty continue to lead that momentum over the next 2 to 3 years?
Well, good morning, Nitin. Good morning to all your viewers. Yeah, we have started off the year pretty well this time. Quarter one was a very good quarter. And the highlights of the quarter is that, it's a very broad-based performance. Both revenue and margins have done very, very well. And B2B and B2C has done well. True Health and Specialty have done well. All our 4 regions have done well. And also we could see that it's a tier 2, tier 3, tier 4, every other geographies have done well. So overall, I think it's a very broad-based performance. That's the first highlight I would like to share it with you. And the answer to your question on our margin projections, right? We have done some structural corrections in our cost management, in the last 4-5 quarters. And every time when we met, I kept sharing about it. And that's what is really now helping and started, coming into the P&L now. And also, we are also seeing good productivity improvement from our existing centers and our labs. And we have not added any labs in the last 5 quarters. So the lab additions have actually, halted for the time being. So more productivity is coming from all the labs that we have put in, and all the centers we put in has started doing well. Tier 2, Tier 3 expansion that we are in the last couple of years has started becoming productive and started getting more patient volume growth. So all this put together, the margin trajectory is looking very bright for us. So the next, 6 to 7 quarters, we would definitely like to see a 27, 28% EBITDA margins coming up.
That's exactly my next question, Mr. Surendran, because, when I look back at the laboratory network in 2024, it was at around 199 labs. Has been consistent there, and last year you ended at almost 209. So for the last 4 years, you've had this network, but you will require that to expand to go to those targets that you mentioned. And if yes, how are you looking at opening up of these new laboratories? Will this be more in regions where you're not present, or how are you looking at the utilization of the existing ones too?
Good. So last 5 quarters, we have not added any new labs. I think as per our strategy, 90 labs were added, during the 3 years prior to that. And then our current effort is basically to make sure all these labs get more productive. So the number of labs that we have today, 220 odd labs that we have today, is good enough for serving 750 towns of this country, right? So going deeper, getting more and more centers open in these towns, and also tying up with the smaller labs and hospitals in these towns is the next focus area. So, for example, we had a lab to center ratio of 1:20 about a year and a half back. Now it's at close to 1:25. We would like to take this lab to center ratio to 1:30 in the next 4-5 quarters. So that's where it's going to be the productivity and the growth is going to come from.
Okay.
Hi, sir, with regards to where your revenue growth goes, you've guided for revenue growth of around 14 to 15 odd percent. And if I'm not wrong, you've said that near term, you're not going to consider any price hike. So just want to get a breakdown as to how this revenue growth will come from, and is it going to be in terms of volumes and versus, your mix, how is that going to improve?
Yeah. So 9 to 10% of the growth is going to come from the patient volume growth, and 5 to 6% will come from the realization. Now, realization, of course, will come on the back of the acceleration of True Health as well as the specialty portfolio. And patient volume growth will happen on the back of the expansion into the rural tier 2, tier 3 areas, and also further, stepping up the actions in the key towns as well. So a combination of all this is going to get us the growth of 14 to 15% during the medium term.
And specialty diagnostics is something that now contributes around 40%, right? Which you plan to take it over to 45%. Because, this entire space is getting very competitive. What are the growth plans looking like? And beyond that 45%, do you expect that this could, further go beyond that 45%? And if yes, what could be the levers?
See, Metropolis is a specialty company. This company was built on the back of a very strong science excellence and good quality reports and access to the clinicians, to our doctors to basically to discuss about the reports and decode it. So that's the strength. And, there are competition coming up. We are aware about it. But, the right to win here is only on the back of the good endorsement that you have from the doctors. Doctors will only prescribe your product when they are very confident about the company helping them to diagnose the diseases better. So I think Metropolis been a very strong right to win in this segment, and 40% currently. We are growing at around 17-18% year-on-year basis. We will further strengthen it. I mean, the last couple of quarters, we have added, genomics portfolio. We brought up the center of genomics for us in Gurgaon, and also with the acquisition of Core Diagnosis, we have added the oncology test capabilities. So specialty is going to be another big growth engine, and we really like to see this going upwards of 40% in the next few quarters.
As we wrap, Mr. Surendran, just a quick clarification, because you mentioned on your 9 to 10% volume growth for this year and your 14 to 15% growth that you're expecting in revenues. How is that split between B2B and B2C? Because we are seeing that the B2B growth in this quarter was much higher compared to the B2C growth. So how are you, managing that split as of now?
So B2B has grown by 15% and B2C has grown by 18%. So B2C definitely ahead of B2B. And the volumes are largely growing on the B2C segment. The B2C segment has got a 13.5% volume growth, and B2B has got about 6% volume growth. See, whatever volume growth that you get in B2B will be all specialty, because at the end of the day, we are picking up the sample from the smaller labs and hospitals, etc. So the volume growth of 6 to 7% from B2B segment is a very good, number. And so it's a mixed performance from both B2B and B2C that's going to happen in the quarters to come.
And just one last quick one in terms of your center expansion. If I'm not wrong, you've said that you remain open to bolt-on acquisitions as well. Can you give us more perspective as to what that plan is looking like in terms of acquisitions and even mergers possibly?
See, we have cash in our balance sheet, as you can see. Yeah, and we are always focused on good quality acquisition. We do a great amount of due diligence before we are acquiring any asset. But in terms of our criteria for acquisitions, geography is one of the criteria. We would like to get good assets, good B2C, good quality assets in the northern part of the country or the eastern part of the country where we want to further expand. And the other criteria for our expansion is if any of the acquisition can add into the skill set, the technology or the test skill set that we already have it, we will go for those acquisitions. So we are on the hunt, and we have a pipe available at this point of time. We are pursuing it.
All right. Okay. So thank you so much for taking the time, and all the best for the rest of FY27.
Thank you.
All right, so that was, of course, the management of Metropolis. But let's, start taking all your stock-related questions now. The next one that we have is on LIC. Our viewer, Pradeep Kumar, has bought 300 shares at the levels of 395. From a medium-term perspective, wants to know, let's try to pull up the charts. 395 is the buying price. Today, it's trading at 388, though the OFS was overwhelmingly subscribed. But Kush, from a medium-term perspective, what do you make of the charts?
Yeah, so LIC has been an underperformer. The momentum obviously has been missing. If anything, it's been a downward momentum. So I remain a little cautious from let's say a medium-term perspective. But yeah, from a near-term perspective, because there's been a sharp gash in the stock and it's coming close to those long-term support zones of 370 to 380, there could be a rebound. That is likely. His buy price is also fairly attractive. So I would say you can continue to hold. Keep your stop loss at about 370, 375 levels.
Correct. Well, the next question is from Sundar from Madurai. He wants to know about Vedanta. And Tapan, if it's a good time to buy into these shares from the long term, you also actually now have a few options within that, Tapan. So is the main holding company the preferred pick, or within that do you like something?
Well, among the Vedanta companies, I think Vedanta Aluminum is the best one to, because there I think demand will be a secular one, and in future EV data center and everything is coming. So Vedanta Aluminum is the one. I think one can go for it. But looking currently valuation, I think one can wait for a little bit longer, maybe 1 quarter more, because the prices are going down. So not now, but in future, I think Vedanta Aluminum he can look for in next 3-4 months.
Okay, all right. The next one that we have is between Kalyan Jewellers and Titan. Kumar from Chennai wants 8 months to 1 year view on both of these, whether he can go ahead and invest 50,000 in one of these. Kush, where is the chart looking more attractive? Is it Titan or is it Kalyan?
It's not even a question. It's not even a question for me. It's not even a question. You have to, if at all you have to invest, you invest in Titan. Right now, slightly elevated, so maybe closer to about 4,700, 4,800. You can consider buying. But yeah, if you're looking for that kind of time frame, Titan's significantly better placed. On the way down, stop loss is close to the 46.50 mark.
Also, Kush, on Maruti Suzuki as well. Jay Krishnan, who's from Kerala, wants to know 6-month view on this counter, and there are bouts, right, for this counter where it comes through. We saw that just a few days ago where it crossed that 14,000 mark, now around that again. But what's a 6-month view also if you have a longer one as well? Because we've corrected from that 17,000 mark, but what's your view?
You guys know, right? You can ask me questions off air also. You're asking me FMCG, you're asking me auto.
We are not asking, our viewers are asking.
I mean, through your viewers, right? I hope it's the viewers and not you, right? No, of course it's the viewers. I'm just kidding. I don't like Maruti for precisely that reason, Puneet. It's got fits and starts, it's got the momentum, but it fizzles out and you see selling pressure on it. 200-day moving average भी touch नहीं किया. March, Feb में जो 200-day moving average छोड़ा था, right now that stands at 14,600. It's not even coming close to that, or maybe occasionally once or twice it does, but not even hitting that mark. So I have my near-term concerns on Maruti. If you ask me, I prefer M&M over that. We've given calls also on that about 2 weeks ago or so. Second target's been hit. The recovery is rather interesting on this one. So if I had to pick, I would still pick Mahindra & Mahindra. Maybe again on declines close to the 3350 mark, but Maruti maybe above 14,600 we'll see, not now.
All right, okay, so that's the view coming in on Maruti. The next one that we have is coming in from Ray, who's writing us from Bengaluru, asking about Pricol. He's bought it at the levels of 633 from a medium term perspective, and he's holding 100 shares, by the way. He wants to know whether he can continue to hold this one, book profits, or still ride the momentum is the question. Tapan, what would you recommend?
Well, if you see for this company, hopefully export growth will be there and a few launches are coming, so that we have to see how the realization will be there. Of course, competition on a higher side, but capacity expansion, and the main thing is how they are going to execute. Overall, auto actually beneficiary will be there. So currently at this level, I think he can hold the stock.
That the big demerger also coming through on Pricol, and precisely that, my co-anchor can also take auto questions, so it's that's okay. But the next one coming through, and this one's on Keystone Realtors. Our viewer Manohar Kher from Mumbai wants to know about this particular counter. Tapan Holdings shares at 600 and he's holding 60 shares. What's your outlook, Tapan, on this one? He's currently sitting on losses. Should he average down, continue to hold?
No, don't average down. No, if you see, of course, the valuation is still on the premium side, and project approval risk is there for this company. Again, high capex needed. And we can see the luxury housing demand is strong, but still I think company has to get new, you can say, customer, and collection hopefully should improve over the time. But so at this level, I think just hold the stock, don't add. But you can wait for next quarter also and just see, then you can take a decision. Okay,
all right. The next one is on Morpin Labs. Our viewer has the buying price is 94.5 thousand shares is what I think this is from Senorita, and she's been holding this and wants to know whether she can continue to hold. She's saying that last time when she gotten this, the price was at 70. And wants to know if it can further see an upside from here on. Kush, what is it that you recommend on the charts?
What a lovely name.
Yeah.
What a lovely name, right? Senorita. The buy price is 94?
No. Yeah, the buy price is 94.
Buy price is 94.
Yeah,
okay, fair. So I think that we know for the last 3 sessions the stocks had a massive run, right, and still not reached your price. The momentum is there. Of course, it's starting to get overheated now. So my suggestion would be hold this with a trailing stop loss, because if this momentum continues, you might actually see your buy price or at least significantly closer to that. Does it have legs to go beyond that? I have my doubts, because major resistance is at 88, 94, 96 levels. So around your buy price there are resistance levels. So my suggestion would be with a stop loss at about 77, 78, hold right now. As it approaches your buy price, you might want to start offloading gradually in this one.
Got it. Well, the next one's on Shaza Motors, and our viewer has been holding these shares at 1,071, and this is Senthil from Tamil Nadu. Tapan, his question being, he's currently sitting on a loss and has been holding for a while. What should the strategy be for him to do now?
See, for this company, of course, there is a lot of volatility is there, but hopefully, if you see BS4 demand should be strong from here, and the new product additions are there for this company. Of course, now you can see the competition is there, but there are new launches. They are going to come. EV components also for them is scaling up. Order pipeline is healthy overall. Cash flow remains robust. So at this level, I think it's better to hold only, wait for one more quarter. I think things should move up. Overall valuations are okay.
All right, so that's the view on Shaza Motors. I think the next question is from Harjeet, who's writing us from Mohali. He's got HAL 330 shares that he bought at the levels of 1343. So a very attractive price that he's bought at. He's sitting on a profit of over 11 lakh rupees and wants to know if this is the time to book partial profits. He's waited for 4 years patiently. Tapan, do you think he should book partial profits or should he continue to hold?
I think for long term, I think HA will do well. Of course, the execution is a problem for this company. Very slow execution. But looking at the order book and the company is working on it, I think things will settle down in next few quarters. So please hold at this level as is a long term player. And again, congratulations to him. But I think this will do well over the time.
The big massive move that we've seen just in the last 1 month. Hopefully, Q1 gets some update on those pending orders. But HBL Engineering, Kosh, is the next one. Prashant has been holding this counter at 730. He's holding 500 shares, so close to the current market price. What should he do? What's your view on the counter?
Rather mixed, I would say. And there has been range contraction on this one, and typically what happens is after a period of contraction, you get a range expansion. Could be on the upside, on the downside. Right now, the way things are shaping up, there's a possibility that it could be on the upside, and plus your buy price is fairly close to the current market price. So I would suggest, with that probability in mind and with the kind of recovery that the stock has shown from 695 odd levels, you should continue to hold. Keep that as your stop loss. On the upside, targets of 775 and then about 800 plus. So yeah, for now you can continue to hold HBL Engineering.
All right, okay. The next one that we have is coming on GE Shipping. Ram from Hyderabad is holding 260 shares, bought at the levels of 1560. Wants to know if he can continue to hold this one or book losses. Tapan?
No, hold. No, because if you see the last few months, in last few quarters, things are settling down. Of course, still the revenue profitability is not going up, but I think there are many things happening for this company. Again, fleet modernization will be happening. Again, offshore business is improving. Energy demand is supportive for this company. So yes, my take is currently hold and just wait for a little bit longer.
Got it. Well, the next one that's coming through, it's on IKS. Our viewer has been holding shares at 1695. We also had the management today come through, Tapan, and some bold EBITDA projection targets that they have. Stocks down almost 5.5% today. What's your view, Tapan? Is it a good long-term bet?
Well, currently at this level, no. I'll wait for a little bit more clarity on this. Again, there is some integration execution risk is there. Again, volatility is also there. We have to see how the things will be setting on the margin front also. Of course, it's an asset-light model, but I'll wait for a little bit longer than only enter.
All right, okay. So that's the view on IKS, but I think we've got Yogesh calling us from Jaipur. Yogesh, a very good morning to you. Go ahead, ask your question.
Good morning, Mahima. My query is kuch bora, kama gadi.
Okay, now I know. Okay, Yogesh always calls us on Thursday. Go ahead.
4,000 shares I have by PNB. Today is a 114 price. What I do for that? I have already 10,000 shares in my side. This is a new purchase for May 2026. What I do for that?
Okay, okay, got your question. I'll take this up with Kush. Kush, good profits he's sitting at. Should he book out? Continue to hold?
Wow, and decent quantity as
Yes,
well,
yes.
right? First up, Kamagani Yogesa. Good moves on this one. अच्छा रिकवरी दे रहा है. थोड़ा सा आपको शायद वेट करना पड़ेगा. 116 के आसपास ना रेजिस्टेंस है जो पिछले 5-6 महीने से ब्रेक नहीं हुआ है. 116 के ऊपर जब जाएगा तो यहाँ पे मोमेंटम मुझे लग रहा है बहुत तेजी से आ सकता है इसमें. तो कोई ऐसा इशू नहीं है. यू कैन वेरी वेल कंटिन्यू टू होल्ड दिस. स्लाइटली डीपिश स्टॉप लॉस एट अबाउट 105, 107, बट या दिस इज सेटिंग अप वेल, अ स्टेडी अप मूव ऑन दिस वन. सो कंटिन्यू टू होल्ड PNB.
Got that view. Hopefully, Yogesh, that answers your question. But let's now start the rapid fire round in this edition of the show. Kush as well as Tapan Nodrill. First one's coming from Shruti, who's from Bengaluru on Bansal Wire. Tapan, she's sitting on a 15% loss. Wants to know her holding price being 390. What should we do with this counter now?
Now it will sell on rise from my side.
Okay, the next one that we have is on Eternal. Shrikant from Hyderabad has bought it at the level of 69 and he's been holding it since then. He says that he's a long-term investor and he wants to remain invested for the next 5 odd years. Tapan, what would you recommend?
First of all, congratulations to him. Of course, hold.
The next one coming through and it's on Power Grid, but the InvIT. Our viewers holding shares are 115, stocks down right now. I think it's the InvIT one which I'm talking about. But Tapan, should he continue to hold?
Yeah, hold.
Okay, the next one is from Raghavendra, who's writing us from Bengaluru, asking about Thangamayil. Kush, this question is for you. Found its bottom, right time to buy?
Yeah, not surprised. I was in fact waiting for this one. Bottom formation perhaps in place. Do you go out and buy an average? No. Wait up.
Got it. The next one's on Avari Renewables. Our viewers holding shares at 1100 rupees per share. So currently sitting on a loss. Wants to know if he should book out Tapan or still continue to hold.
I am not too much bullish on Vari, so it will be sell on rising.
Okay, the next one is on Bank of Maharashtra. This is from Krishna, who's writing us from Chennai. Bought at the levels of 64. Continue to hold, sell, Kush.
Oh yes, continue to hold. Stop loss around 73, 74 kind of levels, consolidating, hold.
Kush, between Hitachi Energy as well as Bosch, I mean, both global names for different segments. Rakesh Gupta from Delhi wants to know which one is better. You also have the results coming through for Bosch on the 10th. What's your view?
Technically, Bosch is better placed and on the verge of a breakout. So this 4200, 42,200 is the zone. If it closes above that, you could see further upswing on this one.
Okay, the next one is on Amara Raja. Rohan has bought it at the levels of 865. Wants to know if he can wait for the next 6 months. Kush, on the charts?
Absolutely. In fact, the recovery is underway. Continue to hold. Stop loss at about 900.
The next one's on Birla Soft. Madhu Babu from Hyderabad has been holding. Wants to know if it's a good time to enter, Kush, for the next 6 months. Been very beaten down. Good time to buy.
It's not a good setup in the IT space, which is already underway. So I would say for now, avoid.
Okay, the next one is on Bellrise. Anand from Goa wants to know if this is the right time to enter for the next 5 years. Tapan, any view?
Buy on dips.
Buy on dips, got it. The next one coming through, it's from Ronak on Wipro holding shares at 200. Tapan, should he exit or should he continue to hold? What's your view?
Exit.
Bata is the other one on which Jaswant Singh wants to know. He's got 365 shares at the levels of 1156. Long-term view on this, Tapan?
Sell.
Next one's on Restaurant Brands Asia. Our viewer holding shares at 75 and has been holding for the last 2 years. So it's come back Tapan after a really long time. Wants to know if you should still continue to hold for the next 3 to 5 years.
No, maybe around 100 start getting more.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. Thank you so much, Tapan, as well as Kush, for helping us solve 56 queries that we have, along with 2 management chunks. So it's a good number to come through, but out of time on this edition of the show. Thank you so much for watching, viewers. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
ये लीजिए भाई, मैंने बनाया एक व्हाट्सएप आपके साथ, खाइए ना। ऐसे आप कहाँ से हैं? हरियाणा। कब गए थे लास्ट वहाँ पे? 1.5 महीने पे। आपकी फैमिली है और बच्चे हैं? 3 साल। मिस करते होंगे आप हमें ना बहुत। फैमिली विजिट करने अलाउड है? श्रीनगर तक अलाउड। 1 हफ्ते की शूटिंग के बाद मुझे घर की याद आ जाती है। सी द सैक्रिफाइस इज अनबिलीवेबल, यू नो।
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies and also interestingly companies which are not tracked by the analysts and to see whether there is an alpha to be made or not. And today is a very interesting company I've got for you. But before that, try to guess it. It manufactures power electric components. Also, the second hint I would like to give you, and that is Mukul Agarwal, ace investor in Dalal Street, has 1.41% stake in the company. Yes, the list is narrowing down. Also, the stock is up 17 times in last 5 years. What a multi-bagger journey this has been. And last one, Q1 earnings is expected to come on August 11. A little bit of branding exercise has also happened, and DI's FIs have increased their stake recently as well. I'm sure you're trying to guess the company, but of course, the company in focus is Hirect. Earlier, this was known as Hind Rectifiers. This is the new company. There's a little bit of branding change also, but why is this company in focus right now? The key questions we'll be asking to the management will be the recent award wins. You know, Vande Bharat theme is there, and then new segments they are entering. We'll try to understand that. And not only that, US orders are also coming a lot, especially the demand order inquiries. How is the international outlook looking like? There is a story of forward and backward integration as well. But before that, we'll understand what's the business model and moat about them. This is the first time company is coming in KYC at NDTV Profit, and this is the story. Is it both sides? If yes, there's an R&D angle to it. We'll try to understand this, if they are going into a full-fledged ecosystem or not. The capex and expansion plans, that's very much important for the company, and the way industry is having the tailwinds, that shows a good momentum as well. And of course, the basic questions we'll be asking. We'll try to avoid most of the numbers because a lot of numbers in Q1 is going to come in a couple of days, but nevertheless, the B2G angle is also there, especially with their exposure to railways. So we'll try to get that clarity as well, the export growth and how many expansions are taking place in this segment. Of course, the management will be with us, where they will give us their entire views. But let's try to understand the company. does the company actually do? Hirect, or formerly known as Hind Rectifiers. This is the company we start with, but this company is quite old. The establishment was there, you could say, in the year 1958. That means almost, you could say, 65 years plus of history is there. Moving on, let's understand more a little bit about the history. It was established in a partnership with Westinghouse Brake and Signal from UK. So the roots are pretty old and having foreign exposure. They manufacture power electric components, to simplify it, but as you go in deep into it, you'll understand which industries and where the application happens. These are the products: transformers, rectifiers, control electrics and power converters. This is like an ecosystem of this segment. Of course, inverters, motors and HVAC system also comes in. But where are these products applied? That's also very much important. There are traditional places like railways, defense, but new age spaces are also there. Power, hydrogen, that's where the market might be giving a very premium valuation to this counter. Chemical, paper is also there, but these are largely commoditized. Interesting story, right? Let's go deep into it. This company is backed by ace investor Mukul Agarwal. Almost 1.4% stake he's having in this company, and this quarter itself DIs have increased. I'm going to give you those numbers, but you have to wait with me. The company has two manufacturing plants. One is located in Nashik, another in Bhandup. Both of them are in Maharashtra. Also, they export to over 30 countries. You know, they have offices in Sweden and UAE as well. Some recent filings suggest they have. Of course, speaking about, their growth strategy, let's talk about the next important point, and that is the recent orders. Spate of orders are coming for the last 7 to 10 days. IGBT converters for the mining industry. This is from US. Second order win. Let's have a look at what the company is doing. This is the first order from Memu Trains. MEMU for this is type of a wagon, and this is the entry into the next gen rail systems. Remember, they have secured the first order on traction motor assemblies as well. So this is what we could see, a different order wins are coming in different sectors. Also, the first Vande Metro development order also the company is getting. So the company is going through verticalization as well as horizontal movement in terms of the product segment. Maintenance electric multiple unit, I'm sure earlier MEMU, which was there, or MEMU, this is the full form for the uninitiated, but nevertheless important order wins coming in for Hirect. But how does the order book look like for Hirect? It's rail. So if you add all these three up, of course, the majority of them come in the railway segment, but there is, of course, spares and industrial products also where the company is having exposure. Moving on from the order book mix, let's see what else is there for Hirect. When we talk about the overall about the company, the key clients, look at that. We have Indian Railways, Tata Group, Reliance. Also, let's look at the other set of clients. This includes IFCO, Siemens, NTPC. So a fair share of government, private players and MNCs are there for Hirect, and that is actually good. The diversification risk come down. But how is the India's rail sector looking like? The demand for total number of locomotives expected to 3x by 2031. Let's look at the second important point, and that is the adoption of regenerative braking, HVAC. Of course, this is the energy efficient part I'm talking about, and the power converters as well. So a lot of usages coming in. Electrical equipment market, that's expected to be valued at almost $90 billion. Can imagine how big this market is, and we have largely or hardly we have penetrated the actual surface. Also, high-speed rail push, that's also where the government is there. But of course, whenever there's a government push, there's also the B2G risk. But I'll explain you that in a short while. Stay tuned with us. But moving on from the rail sector, what may work for the company? The DIs and FIs have been increasing their stake recently, and smart money is moving in this counter. Second reason is the revenue visibility of orders that is showing strength in the company. Third important or a positive point I liked was Q1 is expected to come with strong numbers. This is what analysts are factoring in. Very few of them though. The global expansion and the backward integration, when both of these things are playing out, then a lot of benefit starts coming in for the company. This also includes operating leverages. Strong return ratios and the cash flows is something which I liked, and they have been growing it over the last 3 to 4 years. It's a good trend. But what may not work? The valuations are not attractive. Stock is near its highest levels. The lack of analyst coverage is there. That's where a little bit of concern comes for me. And the profit booking likely may come at these levels even if the numbers are strong in the Q1. The global macro risks are definitely is going to be there, but there's another angle to it also. That's the B2G risk which I'm talking about, especially on the receivables, and at times lumpiness comes in the earnings. So this is the entire picture for Hirect, but let's understand the KYC ratings which we get in a company in our analysis. This includes the income statement, balance sheet, cash flows, and of course I'm going to get to the return ratios, which includes both ROC as well as ROE. Over a short period, long period, we are going to see how shareholding and the street cred has evolved. And the valuation part, if we talk about it, we'll compare that over the 5-year period. And last but not the least, the most important rating to track is the future, that is the outlook. So that's what we'll be focusing on. But let's talk about the first rating parameter, how things have changed. Largely income statement, you see the revenue that has almost gone up by, you could say, 80 to 90% in the last 3 years. The CAGR numbers are good, almost touching the 1,000 crore part in the revenue, and largely the PAT numbers have been, a decent as well when it comes to growth, but not major moves coming in. And of course, the margins front, there is a little bit of variability here. It was 8.7 in FY25, it went to 10.8%, then minor, correction coming in 8.5%. So net, the income statement as of now is neutral because margins are a little bit mixed. Let's move on to balance sheet and see what's happening here. Is there a story at play? Largely, we see the borrowings has gone up, but remember the company is undergoing capex and expansion, but it's decently managed right now. There's no major concern. If you look at the debt to equity ratio for a company in this industry, it's roughly at 1. So that is manageable. So if it is manageable, I'm going to give this a neutral rating as well. We spoke about income statement, we spoke about balance sheet, but the magic is in the cash flows. That is where we are seeing, whether it's lumpiness or not, this is a very strong cash flow coming in if you compare that with FY25 or even if you compare that with FY24. Looking at the conversion also, that's also where I feel alpha is there, especially on this cash flow conversion. So definitely the cash flow has been, you could say, the king over the last 3 ratings which we are discussing. So I'm going to give this a thumbs up as well. Return ratios, let's talk about that, and this is where I had stated that company has been doing well. These numbers, of course, you look at it before FY25, they were near that sub 20 mark, but then they have been increasing, and look at that, from 26 it has touched the 30% mark for ROA. ROC also, the story remains same, a good jump coming in from the levels, almost 24%, and a business like this having almost 20% plus ROC and ROE is definitely very positive. So I'm going to give the return ratios a strong thumbs up. Shareholding is important. No major change happening in the promoter quota, but as investor, Mukul Agarwal has 1.41% stake in the company. But look at it, DIs were literally no exposure in FY24. But suddenly, in the matter of just 3 months, this is where the magic has happened. DIs have taken position, 3% stake here, and FIs have minor increase in their holdings. Interestingly, smart money has started flowing in even after the March numbers. That means the June quarter numbers also, there might be some positive momentum. So yes, of course, this is the June quarter and the most recent numbers. So shareholding, I'm going to give this a thumbs up as well. But let's talk about street cred. What's happening here, how much numbers have come in, what's the stock momentum looking like, and then of course we'll talk about valuations also. If you could just show us the street cred from Jan lows, the stock has already doubled 2.3 times, but the magic is not there. If you're a long-term shareholder, it's a multi-bagger for you. Last 5 years the stock has returned 17 times. Can you imagine? That's the multi-bagger impact has come in the small and mid caps, and these are the companies we get you first ahead of everyone at KYC, so that you understand what's the story. Be it 1 year, 2026, a good momentum has been there. So all around, everybody has made money in this counter. So I'm going to give this a strong thumbs up as well when it comes to street cred. Always remember, when the stock has run up, the valuations get very questionable, and that's what has happened here. 5-year peak, it's a 210 12-month trailing P ratio. Can you imagine how expensive it is? Compare that with the current numbers, that's also in triple digit, almost you could say 100 times, and the 5-year current average levels, that is at 82 times. That means almost 20 to 25% premium the stock is trading from its long-term average multiple. So right now valuations are not good. I had mentioned you profit booking also might come in this counter. So as of now, I'm going to give this a thumbs down when it comes to the valuations front. But let's talk about the outlook. What's the story looking like? And largely strong order flow is expected. I mentioned about the revenue visibility. Second important point, let's talk about the outlook, and this is the global expansion initiatives. There is a lot of order flows coming in the US, so we'll be looking for those announcements as well as asking the management about the story. The indigenous propulsion system development program, how helpful it is it forward integration or backward integration? We'll get that clarity. And manufacturing footprint increase in the European markets as well. Some offices and warehouses are made there as well, and the backward integration coming in for the C2C copper conductor facility, and if that happens, operational leverages does kick in. So this is the entire outlook picture, and I really liked it. So I'm going to give this a thumbs up as well. But let's revise all the ratings which we have given for Hirect, and where does this company stand? Largely income statement balance sheet is neutral, but cash flows and return ratios have been really good for the company. And looking at the shareholding in street cred, smart money is lapping up. The stock is at its highest levels, but because of that the valuations are not attractive. And the outlook, however, medium term, long term remains strong, and we'll be looking on August 11 for the earnings as well. The total KYC rating comes to 6 out of 8. It's largely on the positive side from our average generally which we give to the company. So yes, good set of numbers coming in. But let's also understand the management cred. We have Suramya Nevatia. He's a chairman and MD of the company, and little tidbit about him is he's a 4th generation industrialist and the entrepreneur, and also he has joined this company in I think 2015. He is appointed as the CEO as well, and largely he enjoys playing pickleball and adventure sports. So we'll have a conversation on that as well. But Suramya, it's always a pleasure to have you with us. Good afternoon, and a 2nd gen entrepreneur, or 4th gen in your case. It's always a pleasure to have a chat with you. But a lot of order flows are being announced here. The first from Vande Bharat and all this. Can you just explain us what are these orders like, and by when these orders will materialize?
Sure. So firstly, thank you for having me. It's great to be invited here. Talking about the orders, yes, we have received orders for Vande Metro. It is the complete electrics, including the propulsion system for the entire Vande Metro train. This is the first ever tender floated by Indian Railways for this new design of Vande Metro, and we are truly privileged to be included in that vendor for getting the order. We've already disclosed this, so the order is valued at 60 crores. And we expect to have the product ready in about 10 to 12 months, after which we will do the testing and the field trials. So that is the outlook for Vande Metro. The second one was the MEMU, which is basically the main line electric multiple units. We have received an order for that also for 60 crores. That includes 4 different sets of the MEMU. And that is also for the entire propulsion and the full electrics. So this marks a really big step forward for us because we've been mainly working in locomotive segment, and this this breaks through into a new segment which is globally attractive. So we are really looking forward to this, and the same timeline, about 10 to 12 months for the product readiness, after which we will do the testing and the field trials.
Now, Suramya, you spoke about globally, and that's where my interest came on your US orders also. A lot of first order announcements have started coming in. So I'm wondering, what are these, important order outlook? You don't need to speak about these orders, but how's this outlook looking like from US, and the demand inquiries? Are they picking up?
Yes, actually, the US rail network is bigger than the Indian rail network. They are still very much traditional. It's not really electric, it's diesel. We've been working for the last 6-7 months to get a breakthrough, and now we've received breakthrough prototype orders for traction motor assemblies and the IGBT converter. The traction motor assemblies, of course, is for rail, And this is just the starting point. I mean, the opportunity is significant, unrealistic to be honest. And the second order that we have is IGBT converter, but for mining and not for rail, because we have been endeavoring to diversify and spread our risk and not just be fully dependent on rail. So it's, yes, it's a new application, a new industry, but also a new geography. And that's what we've been working towards. And finally, we've received these breakthroughs. Again, even for the mining, the segment is huge. And we expect to deliver these orders very quickly, perhaps within 6 to 8 months. And then we expect the floodgates to open for this.
Fair enough. Now let's talk a little bit about your industry also. How is your business model fitting in the industry, and what's your actual moat? Because, you know, a lot of viewers are seeing your company for the first time. And so we wanted to understand, if you had to explain us in a very simple manner, what's your business and what's your moat?
Sure. So we are a power electronics company. We basically work with private industries and rail, more towards mobility and rail side. And power electronics basically means IGBT related converters, inverters, high power, so different kinds of systems that make the train move, and the associate products with it, such as traction motors and transformers, HVAC systems. Our moat is that we control the technology. Everything that we deliver is designed by us in-house. We don't have technology partnerships. We don't have any tie-up with any foreign company. We don't owe anybody any royalty. We don't owe any mandatory import of electronics. And when the government or when the railway decides that we want to move from, let's say, specification 5 to specification 6, we can do it pretty much very quickly because all the technology is in our control. So up until now, we have been a manufacturing company, but now we have transitioned to being a technology company with manufacturing expertise. So that's the competitive advantage that we have, and that is the USP that we bring.
Put, Suramya, but let's get to a deeper into it. There is a forward integration happening. There is a backward integration happening. What is this? And any kind of future plans, you know, we can expect more on either sides?
Yes. So we are continuously either backward or forward integrating. We've done the copper backward integration because it was very challenging for us to keep procuring CTC copper conductors. There is a shortage for this segment because the transformer industry is booming, and the copper conductors became a shortage. Now that was affecting our traction transformer supplies to the railways. We had to import copper from outside of India, and that was making it very expensive. So we took a decision to bring it in-house to help us control the supply chain, the quality, and the cost. That's just one example. We've done a bunch of different backward integrations, even on the electronic side. And coming to the forward integration, the train sets orders that we have received is a natural forward integration step because all the products that we make, all these a la carte pieces that we have now gets integrated into one big direct system. So that is forward integration that we are doing. And yes, we will keep doing it continuously, whether it's backward or forward. We will keep looking at the problems that we are facing and how to overcome them by vertically integrating. So yes.
Right. Suramya, I want to understand the capex and the expansion numbers in the long-term basis. Are there any numbers which we should be tracking?
Yes. So as you know, we're in the silent period now, but I can tell you what is publicly available.
Yes.
That about 50 CR of capex is what we have planned, and yeah, that's what we're looking at. Our infrastructure currently is capable to accommodate our growth for the next 1 or 2 years, but then we will be looking at expansions in manufacturing capability as well.
Fair enough, and this is enough which we can get in the silent period, and we respect that. But let's try to understand the client demand trends and the confidence, Suramya, how things actually pan out. Right. So I just wanted to understand that the client demand trends and the overall confidence, going ahead.
No, of course. So there is continuous demand from railways. We've done the electrification of the entire Indian railway network. Almost 99.6% is now electrified. And now they're bringing out the electric locomotives. They're trying to increase the different SKUs of trains. So currently, it is 1,500 electric locomotives every year that Railways is building. Going forward, they're going to gradually start reducing the electric locomotives and start increasing the different trains, like your Vande Metro, Vande Bharat, all different these SKUs of Vande Bharat that they have. Electric locos primarily will be used for freight and goods. And then for the passengers, I think it will move more towards these futuristic modern trains, which will provide more comfort. So um, demand exists. In fact, it's growing, and we don't see any change in that happening anytime soon.
So demand and revenue visibility is strong. That's what the management is talking about. So Ramya, I want to understand the B2G risk also, because in your business there is a government exposure also. At times receivables get delayed or the payment cycles get impacted. But interestingly, your cash flow has done really well, at least for FY26 and the Q4 numbers. How do you mitigate this B2G risk? Could you just explain us?
Sure. So firstly, coming to the cash flow side, I think that's a misapprehension. From Indian Railways, at least, there is absolutely no issues regarding payment. The payments do come on time because the ticket size of our billing is so huge that if they don't pay vendors on time, how will vendors, maintain their cash flow and build for the next month's production? So the payments do come on time. And yes, there is a risk attached to having just one big customer. So for that reason, we've started taking these steps of getting into different segments, such as mining. We are trying to get breakthroughs in India as well, but somehow, fortunately, we were able to get a breakthrough in US before India. I think that credential will help us to enter India in a stronger way once we supply that. And we are continuously looking to diversify that risk. But having said that, we know for a fact that the growth rate of rail is so tremendous that even if you do diversification into other segments, it will not catch up. But yes, there will at least be some sort of balance between rail and non-rail, or government and non-government.
Enough, but the export growth for the European markets, we spoke about the US markets, we spoke about the Indian markets, but the Europe markets, what's your strategy there for growth? Is there some kind of an acquisition? But it's clearly not in your DNA for these acquisitions, because you do everything in-house to simplify it. So I wanted to understand, there's a warehouse. How do you plan this Europe strategy?
So in Europe, actually, we acquired a company last year. It is into electronics, robotics, and printed electronics. For Europe, we are looking at more on the industrial side of things, such as maybe data centers, maybe something in the defense side, maybe something in renewable energy side. Maybe not so much on rail, because Europe, to a certain extent, is saturated towards the rail front, and there are way too many established players in Europe any which ways. But it's more towards industrial and more private segment that we can cater to in Europe, or even as tier 2 for the rail segment.
Right. And so, Ramya, one more question, a short one. New product lines, which you are looking at. You spoke about these new age sectors also, but any other product lines around this new age, if you could explain us, should be a bit easier, simple, not so technical if possible.
So we are continuously developing new products. We have 42 products in R&D at the moment, but they're all around power electronics. We don't want to, navigate away from our core, because we really understand this. So within power electronics, we'll keep developing newer products for different applications, different ratings. We are looking at a whole bunch of things, and we'll keep doing that R&D.
Right, so Ramya, it's always a pleasure to have you with us, and of course, best of luck for your Q1 earnings, which is coming on August 11. It's always a pleasure to have the next generation leaders holding the mantle for their companies. So thank you very much.
Thank you, Sharad. Thanks a lot. Pleasure to be here. Thank you.
Yes. So that's the management of Hirect, formerly known as Hind Rectifier, stock at all-time high levels, and at a pivot, you could say that company is moving towards new age sectors. Interesting story, right? So for all these interesting stories, stay tuned to NDTV Profit and keep watching KYC weekdays at 11:30 a.m.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact. Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV
Good afternoon, you're watching Markets at 12 with me, Shreyanshi Singh. This is the show that we get you updates on the top buzzers at and news updates, of course, at noon. But first things first, a quick look at how the markets are faring right now. And when you talk about the Nifty 50, you've seen some bit of volatility really come in. When you talk about Nifty 50 as well, even when you talk about Sensex as well, that's a little bit of volatility that you're really seeing coming in. Still holding on to those 260 odd point gains as well, that Sensex for you at this hour as well. Let's also quickly pull up the sectoral indices and take a look at what they're up to, because largely it's looking like a mixed sectoral picture right now. So when you talk about something like auto, media, metal, realty, as well as rural, some of those sectors holding on to a tinge of red at the moment. What's doing resiliently for itself is India Defence or even oil and gas, pharma, PSU banks, some of those sectors that are doing quite well for themselves. Let's also quickly take a look at the Nifty 50 top losers and gainers as well. In terms of the picture that you've got there, of course, from the broader universe, there's a whole bunch of stocks, the likes of Tenneco Clean, or something like a Saregama India that are holding on to some bit of, losses also coming in. Naveen Fluorine, that's doing quite good for itself right now. And something like a Newland Labs on the back of its earnings, also 10% odd uptick also coming in there. Even the defense pack very much in focus as well. So it's HAL that's doing quite well for itself. When you talk about the list of top losers and gainers from within the Nifty 50, it's actually something like a Reliance, which is doing quite well for itself. Look at that 3% gain coming in. And when you talk about some of the benchmarks, they're holding up quite well, which is why you're seeing that bit of resilience really come in when you talk about markets. But let's also decode this further. Get in Feroz Aziz, Joint CEO, Anand Rathi Wealth, to explain all of this in terms of what to be expecting in trade today as well going forward. And Feroz, first things first, a very good afternoon. Just wanted to kick off the conversation by starting the chat with the curious case of CES as well, and the way that you've seen that really unfold for the markets. The last few minutes, to say the least, are quite volatile as well. How are you looking at that, and do you also see that settling in eventually as the market also gets used to it?
Good afternoon, Shreyanshi. I'm very, very happy and positive about it.
Because what I, as a derivative treasury person for the last couple of decades, I've been mentioning this maybe in your channel. I would have mentioned to Alex a couple of times. The derivative cash market had become the derivative of derivative. Derivative derives its word because the value of a derivative depends on the cash market, is why it's called derivative. Unfortunately, हो क्या रहा था कि cash market was deriving a price from derivative. So that's why you see an attempt to make sure that the manipulation reduces. Now, is this the first attempt? I'm very happy that the regulator is doing an attempt. When you see to naked eye, several transactions which were brushed aside saying it was a fat finger. I read that, okay, itna loss kar diya, it was a fat finger, it was an erroneous trade. Those were not erroneous trades. Those were intentional losses created in the cash market so that a person can make 5 times more the money in the derivative market. If I want to lose 100 crores in cash market, and if I build position such that I make 500 crores in the derivative market, that's what was happening, and we were just calling it fat finger and saying that koi dealer ne by mistake apna loss kar liya. Nahi, loss profit ke liye kiya tha. So is the regulator agile, vigilant, is doing an attempt? In the first 3 days, will you get super normal output of a new attempt, an innovative attempt? The answer is no. I'm very happy with the intent, and I don't think people are being as positive as you should be, because intent is more important than the 2-3 days of its efficiency and the market. And you are seeing arbitrage funds giving supernormal return for 2-3 days, and people are making reel after reels, and the return aa gayi, wo wapas bhi chali jayegi jab futures and cash market have to converge on an expiry.
No, absolutely, and that intent is right. Some bit of teething pains that you're seeing right now come in with the efficiency. That's the word coming in there. But, just also wanted to try and get a sense of what you think about what's been happening with oil prices and whether or not market is actually, do you think that market has completely sort of digested that as well? It's growing a little more, resilient in terms of those oil price fluctuations. That bit of screen is not being monitored closely enough, or do you think that it's just some of those range bound levels, and once once it breaks out of this range, you'll see that story completely change and unfold in the ways that we've seen it unfold previously for oil prices?
The oil prices are one of the easier things to predict. And those have to be predicted on the long variable, which is the right variable. People predict where will oil go. It doesn't matter to a country where oil will go. What will be the mean price for the financial year? What will be the median price for the financial year? That's the projection people need to do, because you're not going to buy all the oil you need at the peak value or the trough value. A country is going to import oil, which is our largest import, is oil, right? So I'm going to be importing it in a staggered fashion. So what's the mean? What is the median? Currently, the mean is 91. And our expectation is that the mean will be 85 for this financial year. And this I had said when oil had touched 120, because oil is not a scarce commodity. If there is a supply shock, the supply shock always corrects itself. If you look at in the last 50 years, there have been 14 times oil rose 50%. It came back down 12 times out of 14 times. Every time there is a supply shock, oil comes back down. If it rose 50%, it comes back down 29%. Okay, only 2 times it has not come back down within a year is when the global financial crisis के बाद की जो demand recovery थी, या COVID के बाद की demand recovery थी. These were the only 2 reasons why oil didn't come back, because that was genuine demand which rose prices, not supply shocks. So supply shocks can't keep oil higher. This is no rocket science. And if you look at the futures market of oil, when it was peak, it was very evident the peak was behind. And I had said that on the peak day of 124, that you will not see further peaks. So I think oil is rightly at that place. The mean level of oil for the year is going to be 85 in my judgment.
All right, then. So need to be asking different questions then when it comes to oil prices. Thank you so much, Feroz, for taking time out and joining us this afternoon with the outlook as well. And, some of the pockets of value that you could be seeing emerging as well if you ask different questions as well. But let's also move on and talk about something like an Aadhaar housing finance. And overall, it looks like a strong set of numbers. In fact, Puneet is joining in with just that update, and we'll also get a chat going with the management as well shortly.
Well, most certainly. I mean, the net interest income growth for quarter one has been quite strong. It's up almost 20%. The total income is also up by around 17% odd. Operating income continued to show some strong positive momentum in this particular quarter. So that has grown by almost 19%. Was also something to watch has been the profitability that has grown by 19% on a YOY basis, while the AUM growth is at 18.2. Now, here is where there's a slight more interesting part coming through, because the company actually mentioned that they've gone through a change essentially in the way they are going to be disbursing now. So it'll be more check when it gets in hand of the consumer and essentially their customer. Only then they'll start charging in. So that could have some margin impact. But it's basically what was one of the key reasons why there was a 300 crore impact for Aadhaar in this particular quarter. And hence the company mentioned that they could have disbursed this more in quarter two is when they will recover a lot of it. So it's important to get the perspective of the management on this as to why the change now. It's also something they've spoken about over the next 3 years, big targets to go to 50,000 crore in AUM. They are at almost 31,000, but it will require them to grow at 20%. So the key question being, if all of this gets addressed, and to talk exactly about that, we are being joined by Rishi Anand. He's the Managing Director and CEO of Aadhaar Housing Finance, now joining in. Mr. Anand, very good afternoon to you, sir. Thank you so much for joining in. As I mentioned, why the disbursement change now essentially is the first question I want to ask you, and whether you can guide if a lot of that recovery essentially will be done in Q2, or will it be more spread in the next couple of quarters?
Okay, yes, you're right. We've gone from the regular way of doing business of check handover and disbursements to now check realization. And then you're right. As far as we are concerned, it is always customer first and governance at the top of it. Keeping that in mind, we were contemplating for the last couple of quarters to move to something called check realization, which effectively means that I will charge the customer interest from the day he takes my money, and not from the day he takes my check, which is generally a gap of 5-7 days. So, why take that 5-7 days of extra interest from the consumer? Yes. So from a purely high governance standards, we have moved to charging from check realization. Have we lost any business in this journey in the quarter one? Yes, I would say about 300-400 crores of business. And I will not term it as loss. I will term it as carry forward business, which effectively means that we are going to recover that business in quarter two, quarter three.
Got it. And fair point, Mr. Anand, point taken. But, you also mentioned and maintained that, for FY27, the AUM growth will be almost 20%. So you have had almost 18% this quarter because of this fundamental change you mentioned. So the question being, why the fundamental disbursement change now? I know you mentioned about the last couple of quarters, you've been thinking about it, but how is that recovery expected to maintain that 20% PAT as well as the AUM growth target for this year?
Okay, first let me tell you why it will be seamless and why we are so confident. If I were to do a like-to-like comparison of disbursement to disbursement versus what we did last year, quarter one, and what we've done it's a 19% growth on disbursement and about 18.5% growth on AUM. Now, this 19% growth on disbursement actually has translated to a only 3% growth that you see in terms of numbers, because we moved to realization. So the carry forward business gives us that confidence that, the guidance in the medium term of 20% growth on AUM, 20% on disbursement, 17-18% on disbursement, and about 20% on profit is going to be, current year looks very comfortable and confident.
You also have a strategic target to reach that 50,000 crore assets in the management by FY29. My question largely being, what are any other changes that you need to do within the organization, within personnel, if any, to reach that level?
So I would say, where this confidence comes from is, our distribution network, which is at the forefront. Today, we stack at about 628 branches, adding 50 branches every year for the next 3 years. So this year, for example, we're going to be adding about another 45 branches in the next 3 quarters. That enhancement of branches and our model of urban emerging markets, a little more trying to balance out the emerging market and the urban market business. I think that gives a little confidence of the 50,000 magical figure that we've been speaking about over the next 3 years.
Also, sir, in terms of the loan against property share, now that has increased to almost 27% in Q1. Versus I think 14 to 15% that was back in FY20. Now you of course had a change in that process. Where could this target go in the next 2 to 3 years? Because there is that 70% home loan share that you want to maintain. So if you can give us some perspective as you go to that 50,000 crore mark.
See, purely from a regulatory perspective, we work on something called the principal business criteria, or the PBC as we call it, which allows you to go, in a layman language, allows you to go to 70-30 kind of number, 70 being retail home loan and 30 can be anything else, which has to be tagged as non-housing. Today, at the book level, we stand at about 73-27, and we are at a very comfortable range. We don't want to be close to the breach point, which is 70-30. And if you look at the definition, it says that 60% of your balance sheet, including cash in hand, has to be retail home loan. So from that perspective, you're right. We have grown the loan against property business over a period of time from a 17-18% to a 27% today. And that's where we are going to be. Incrementally, we might be a 70-30, but on the book, we will always be I would say a 72-28 kind of number.
Good. Well, Mr. Anand, we leave it at that. Thanks so much for joining in, giving us perspective about the company as well as what Q1 led to. We look forward to our next conversation. But Shreyanshi, that's the bit on Bazaar housing, a quarter that was marked with the governance change, but a strong one indeed.
Absolutely, and even the commentary for the medium term especially is looking quite bright as well going forward. But let's also move on and talk about another strong quarter for Pidilite with resilient performance as well. You do have Mahima who caught up with the management. Let's go across and listen in to a slice of that interview.
Pidilite, of course, is in focus. Yet another strong quarter and a resilient one for Pidilite. Overall volume growth was at 11%. Margins have also seen a good uptick. To understand as to how things are shaping up and what FY27 is going to look like, we're now joined by Sudhanshu Vats, who is the Managing Director of Pidilite, joining us now. Sudhanshu, thank you so much for taking out the time. I think my first question to you is going to be that, quarter on quarter, we've seen resilient performance coming in from Pidilite, right? Just want to get a more sense now from a broad perspective of demand, because volume growth is at double digit, which is a step up as compared to where we've seen historical trends, right? Where is this demand coming from? What do you make of the trends? Is it the housing demand, premiumization, market share gains, channel expansion? What is it that's working for you?
So, Mahima, first of all, good morning and lovely to speak to you. I think, we've delivered a strong set of numbers in Q1. And I think, and you've captured it in your question, partly the answer. See, I'll tell you, three things happened in the quarter which basically helped us deliver the numbers we've delivered. I think one is demand is intact and demand has remained quite steady, which is very important. And that's why we delivered underlying volume growth of 11.3%. And I think this demand, as you rightly pointed out, has different components. So I think premiumization is continuing. Some of our premium innovations are doing very well. Whether it's NeoPro, which we had done for our tile adhesive in the joint venture Grupo Puma, that's doing exceedingly well. Whether it is some of our newer innovations in Fevicol that they are doing well. Whether we've done something in the area of Dr. Fix-It. So therefore, our premiumization journey continues to be good. Channel expansion, PKDs are now sort of expanded and are touching nearly 25,000 number. So therefore, and marketing campaign, if you were to look at last quarter that went by, we did on our big brand Fevicol, Kursi Pe Nazar. And I think, the campaign did very well, Mahima, and there were quite a few memes on that as well. So we were very, so basically very cultural. So we worked on all elements of demand generation. Fortunately, demand remained very intact. What helped from the margin point of view as well is that we basically took up prices in a calibrated fashion but at the same time, very proactively and timely. Our pricing philosophy is based on replacement margin. So therefore, what is the cost of raw materials today, in a manner of speaking? Whereas if you look at the actual margins that flow through in the quarter are consumption margins. So because of some of the carry forward of low-cost inventory from the previous quarter into this quarter, we got an additional advantage in this quarter. So I think that's another piece which has come through. But overall, as the demand is staying intact, our premiumization, innovation, marketing, channel expansion are continuing. we are confident of continuing to deliver good volume growth with good margins.
The inventory, the low-cost inventory that you talked about, Sudhanshu, do you think that inventory is now completely sold out, or do you think there will be more spillover in Q2? And considering that, this was also one of the reasons as to why your margin was above the guided range that you've given. But overall, just from the fact that your margins have also been very resilient despite of the input cost inflation that you've seen, within that guided range, do you think that for FY27, it will be at the higher end of the guided range of 20 to 24%?
Mahima, actually, in today's day and time, it's very hard to say.
Yeah.
But having said that, if the situation remains relatively, this entire volatility remains relatively benign, if I can use the word, it's paradoxical, but if it remains a little bit more stable, our sense is that with the strong start we've seen to Q1, we will basically, it'll taper a little bit, but we should be in our guided range of 20 to 24. And it is quite likely that we will remain from middle to higher end of our guided range. You're absolutely right. Having said, on the second part of your question on the low cost inventory, almost all of it is used up in Q1. So in Q2, therefore the margins, and I've never said that we should look at margins in a quarter. I mean, you've always heard me. We should look at margin for a year. Even now, FY27, if you were to look at a first half FY27, you will see Q2 tapering without doubt, because there will be the high cost inventory which we bought will come in. You will also see that it's a smaller quarter, so leverage is smaller. If you know, the Q1 also is one of the biggest quarters, the biggest quarter, or one of the biggest quarter. Q1, Q3 tend to be big quarters. So Q1, basically that leverage also comes in. So if you were to look at, because of huge raw material inflation, our gross margin did suppress a little bit. If you look at our numbers, it's about 70 bips if I'm right. So 70, but because of the leverage and our control on other costs, barring the demand generation advertising spend, which we did, we always do things for the long term. So that we did. But because we managed the costs in that bracket, we got a lot of leverage in EBITDA, and I think that flew through.
Interesting. And because you mentioned that it could be in the mid to high range of your guidance for your margins, I wanted to ask a follow-up on that, because if I'm not wrong, in this quarter, across categories, the price hikes have been between that 2 to 12% mark. Going forward, considering how raw material inflation pans out, how much more headroom do you think you have to take those price hikes, and that combined with what kind of volume growth can you expect for the rest of FY27?
Yeah, so Mahima, we've always talked about a double-digit underlying volume growth. So we will continue to work towards that. That's part of volume growth. As far as pricing is concerned, what is happening is that basically raw material is quite volatile. So if raw material comes down, as you know, and in some cases it is coming down, to be honest with you, from the peaks we saw in the month of April and May, it has sort of come down. So basically, we may have actually, on the contrary, we may be passing rebates in a few categories if needed. Because Pidilite has always believed in win-win philosophy. We would like to do what is right for our customers. At the same time, we also have to keep a premium. What is the pricing premium we should enjoy over our other competitors? So we are very conscious of that. So we will continue to maintain what is right for us in the long term, and also a win-win philosophy. So you will see so it's very hard to say. It's not a secular movement one way. It's basically, it's extremely volatile, particularly this time around. So I think it goes up, then it comes down. So having said that, the pricing which we have taken, we will, wherever needed, we'll pass a few rebates. Whether there is additional pricing will only depend on if the raw material further goes up. At this moment, there seems to be no specific evidence of the same.
Understood. With regards to competition, because I was listening to Asian Paints, and they've also kind of they are expanding their presence in the adhesive space, doing backward integration, etc. Just want to get more sense of what do you make of the players entering into this category, the already established players who are kind of expanding into this particular category, and by any chance, do you in terms of where competition goes, are you looking at any change in terms of where market share goes?
No, we've had competition for quite some time.
Correct.
I think the company you spoke about has also been in adhesives for quite some time now, at least about a decade.
Right.
So I think it's not, so this is not new to us. Our philosophy is to do the right thing, continue to do demand generation, continue to work with our users and applicators in the right way. We will continue on that path. Competition is not new to us, so we will basically continue to work in that space. Some of the backward integration is their philosophy. We believe that as far as VAM is concerned, particularly, I think buying VAM smartly from the market and managing the cycle of VAM from a procurement policy point of view, I think has held us in good stead. We feel that will continue. We've looked at India as a place ourselves and also as with our key partners and vendor partners who are some very large companies who do this business globally. I think in our judgment, India doesn't offer a competitive advantage for this particular raw material.
Got it. And it's reflected in your numbers. Absolutely. And it's reflected in your numbers as well, Sudhanshu. They do the talking itself. But just one last question from an export point of view, because geopolitical disruptions is where, it's overall impacted your international business. But you've said that overall the contracts remain stable. There's nothing gone there. But from a recovery perspective, what are you expecting going forward?
So I think the moment the situation stabilizes, and particularly in West Asia, but I'm saying let's see when that happens, and let's say Strait of Hormuz opens, I think we should be able to get all our exports back. We are confident. We are also, and in the future, if you look at it, as some more FTAs open up for the country and there is work happening on that, you are aware. So we will continue to look at opportunities where there are right opportunities for us to expand our export base further, particularly in B2B business. And as far as our branded exports are concerned, they are concentrated a lot more in Africa and Middle East. And because of this West Asia conflict, I think basically there was the challenge with logistics as well. Some of that will automatically correct as we go forward.
And there you go. So that's a word coming in terms of the challenges also when you talk about Pidilite. Raw material cost is, of course, something that they've highlighted. And you do have some stocks like Cummins India and some other counters that are buzzing, that are under a little bit of pressure after their results as well. Quickly, let's also pull up some of the stocks that are holding up quite resilient, though. So something like Reliance, Shriram Finance, Eternal, some of defense counters doing quite well for themselves, by the way. About 1.8% uptick coming in. And you do have Goldman Sachs that's quite bullish on some of these counters as well going forward, especially BEL, and that's one counter that's buzzing away in trade. Moving on, let's also talk about some of the other counters as well that are in focus as well. So you do have a bunch of counters, the likes of Powergrid, Trent, Hindalco, NTPC, some of those counters that are trading with a little bit of downtick at the moment. So largely it's the defense pack that's doing quite well. Some of your earnings reaction, something like a Naveen Fluorine that's standing out with that 10.7% gain coming in. Also Newland Labs with that 9% gain, and you do of course have the strong quarter that you had for this particular counter, robust revenue growth as well as margin expansion, and that's seeming to be helping the stock as well. Let's also talk about Aegis as well. 5.5% uptick coming in for that particular counter at the moment as well. And that's also one counter to really look at on the back of some of the news flow that we've gotten for it as well in terms of the earnings as well. So that's also one counter to really look at as well. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में. अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है. पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ.
The mustard specialist since 1933. बरसों से सरसों.
कुछ तो बात है इस दिल में.
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from fact.
Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suslan studio with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. A pretty, narrow range, I would say, in terms of today's session is what we are seeing. The question is, where is all the action?
But fair enough, Hiral, and yes, I'm also actually not trying to find any trend as such. Look at Nifty, there is a volatility happening and we are almost at the flattish levels here. However, if you pull out the Nifty Bank chart, a little bit of recovery is there, but will it sustain or not? That's the big question. Let's pull out the Nifty Bank and see what's happening there. Yes, we are near the day's high level, a little bit better, settlement coming in, but overall the volumes are on the lower side today and it's a lackluster day of trade. Let's understand, how things are coming across. The Nifty is still volatile right now and you can expect that going ahead, but Sensex, you should be keeping an eye on it as well. Nifty Bank, a technical recovery, but a resistance, a very narrow resistance we can expect going ahead. But today is the first Sensex expiry under cash, so you should be looking at Sensex if any trades are there to be made or not, but the volumes are very less, so that's the caveat. So that's is happening across the segment, so you can expect a little bit more volatility in the closing session. Also a narrow range of trades sectorally, but the defense segment, that is outperforming, so good rotation is happening off the money here. Small caps, Hiral, is the star. Value buying for the third straight day. So no matter what's happening in the large caps indices issue, there is a good buying in the small caps. Majority global asset classes are in a tight range right now as we are seeing geopolitical developments which are happening. But let's talk about the new listings, what has happened. Bumper listing for both of them technically at their listing gains coming in for both MV Electrosystems and Juniper Green. But today earnings is also in focus. Let's look at the key earnings which should be in your radar of Hero Moto, Trent and Britannia come up with their numbers. Also looking at the mid caps and the F&O names, it includes Lupin, LIC and Blue Star as well. So very stock specific approach. Apart from defense, all the sectors here are in a very tight narrow range and the volumes are on the lower side.
Absolutely, volumes are narrow, though it is Sensex expiry, so it's going to be interesting But thank you so much, Sharad, for that. You know, one stock that is in focus today, Datamatics Global Services. Let's pull up that one on the screens and see what the stock is doing in trade on the back of earnings. 1.5% is the kind of downtick that you're seeing right now. Revenues are down 1%. Your net profits, however, has seen a growth of around 63%. Margins have also dipped slightly. 15.3% versus a 16.9% is what you're tracking. And there has been a 40 crore fair value change in the fourth quarter of FY26 in contingent consideration for subsidiary acquisitions as well. Rahul Kanodia, Vice Chairman and CEO Datamatics, joins in. Rahul, welcome to the show. Always a pleasure to speak to you. If you have to decode the first quarter in terms of what has actually happened, because good profit growth. So what has led to this kind of a profit growth, number one? And two, if you have to take cues in terms of the mild flattishness that you're seeing in terms of the top line and that correction that's come in terms of margins as well, what would you allude to in terms of those numbers?
So the revenue flattish is not a concern at all for us because if you see the last 4 years, Q1 is always a little lower than Q4 for us. The reason is that we have a spike in Q4 every year. So therefore, we are not concerned about that. Our projection is still about high single digits for the year, and we maintain that. In terms of the margin, because we've had increment cycle, Q1 gets hit because of the increment cycle, and then obviously, and we have the last year's payouts for the bonuses and the incentives that we give out to people. But that's a very temporary phenomena. I think next quarter we claw back and we should be okay. So that's not something that concerns me at all.
Okay. And so you're saying next quarter you should see something that would be okay as well. So clearly, you know, if you have to talk about the operational improvements versus the one-off factors that we are seeing as well, how much of the growth has come in from operational improvements which are sustainable versus one-off factors?
And there are no one-off factors really in the bottom line improvement. It's mostly all operational efficiencies that we brought in. So there is no spike that we see or no one-time transaction.
All right, sir, of course, trying to understand, you know, how things are panning out on the longer scheme of things. You know, what's the guidance looking like, especially on the revenue and the margin front going ahead for FY27?
So on the revenue side, as I said, we had projected about a high single digits. We'll maintain that. On the margin also, we should have, maybe we had about a 19% EBITDA margin, maybe a 0.5% improvement further on that is the range we're looking at. In the recent past, this year at least, in this financial year, if we see the kind of deals that we are getting, about 60% of our wins are on the back of AI, heavily AI driven. So that's good because our AI first strategy seems to be delivering, where bulk of the wins are AI driven. And when I say AI driven, I mean a large part of it is AI, not just a small AI component in it.
Okay. Can you quantify that for us? Because we're talking about validation of the AI strategy. What percentage of the new deal wins today have an AI component versus a year ago?
Well, I would say a year ago, probably 5 or 10%. As I said, this time it's upwards of 60% of the wins are all AI driven. And when I say AI driven here, I'm saying it would be a 70 to 80% AI component in that transaction versus 5 or 10 or 15%. Because today every deal has some AI in it, but it may not necessarily be a 70-80% AI component. So these are all very heavily AI driven.
So Rahul, can AI become a meaningful standalone revenue contributor to business of Datamatics Global, or will it be a primary driver of high wallet share within the existing service lines that you have?
The market, we have to re-engineer all existing services into an AI-driven. AI cannot be standalone because ultimately it's doing the same work. So if you're doing an insurance claim processing, you're still processing insurance claims. So that's not changing. It will replace people to some extent. It'll make things more efficient, faster turnaround, more accurate, things like that. But it will be heavily AI-driven. The deal sizes also that we are seeing are expanding in terms of earlier we were seeing a lot of proof of concepts, they shall continue. But now we're seeing real projects and the deal sizes are increasing. So there's a scope increase in all the transactions that we're doing.
And
And
if you have
AI
to
can
look-
never be standalone. AI can never be standalone because it has to integrate into all the enterprise systems.
No, but that's from a business model that you have, right? I mean, there are companies who are solely dependent on AI-driven revenues. Yes, probably not in the Indian context. If you have to look at digital operations, digital technologies, and digital experiences, from the three segments, operations is the largest revenue contributor, strong growth there. Technologies, it remains central to your AI as well as cloud positioning as well, from what I understand. And it's digital experiences which has seen growth challenges in the past as well. Where would your synergies then lie now between the three segments?
So we are seeing actually large deals coming in the digital experiences space right now. And the digital technologies is really the heart of AI because that's where we incubate all the AI technology. And that then gets transported into both the digital experience and digital operations as well. So these are actually merging into one. You can't really have them as three standalone. Increasingly, they need to operate as one because the operations team understands the operations of the customer and the technology team understands the operations of technology, and when they work together is really where we really deliver the maximum value.
Okay. Let's talk about acquisitions and integration. The TNQ Tech integration is now complete. So beyond TNQ, are there any inorganic growth opportunities that Datamatics is actually chasing, to strengthen capabilities in any of the segments of business? And two, when I talk about the Dextara-related merger and restructuring activities, I think that is ongoing as well. So on the acquisition, on the integration front, what are the outcomes that you're expecting in the next 12 to 18 months?
So we are in dialogue with some companies also from an M&A point of view. These are more in the area of data and cloud because data becomes very central to the AI strategy for any organization. So these are more in that space. To your point on Dextara and TNQ, both the integrations have gone extremely smoothly. In Dextara's case, also the kind of deals we are getting are much larger than what we had in the past pre-acquisition. So that's also very comforting to see that clients are giving us those kinds of deals. So both of them are working very smooth. They've both grown. They've both delivered good margins. So I think we're in a good place on that.
Okay. So if one has to track a Datamatics from an investment perspective, I'm talking for an investor, what should that be now from here on?
I think really one is looking at how we are in the process of reinventing ourselves and really going with an AI-first strategy. The key question is really what happens on the AI because that's going to be the future frontier for all of us to compete on. And the faster we pivot, the faster an organization captures that market, the better off we'll be. Initial years, one may still, and every company will, invest heavily. So you might see a little margin pressure, you might see a little revenue, but the pivoting is the most critical component, I think, for any tech organization.
Okay, so it's going to be interesting to watch out for how that pivot actually functions. But thank you so much for joining in. Always a pleasure to speak to you. In fact, we are seeing a mild bit of a correction that's coming in on the stock as well. I think it is at the day's lowest levels right now as we speak, a 2.3% downtick coming in. In fact, the stock is seeing a correction after we've started this conversation with the management and the commentary that we're picking up so far. In fact, let's also go to our guest who is joining in. We have Rupesh Solanki, Technical Research Analyst at Latin Manharlal as well. Rupesh, welcome to the show. Always a pleasure to speak to you. I mean, I want to talk to you about a Datamatics Global Services chart right now. Right now, there is some little bit of pressure coming in, but in the last 1 year, not done much. It's a complete downturn of 18 to 19%. Someone who's holding the chart, would you still advise to book profits, or do you think it's best to average out at current levels and hold on?
Yeah, good afternoon. Looking at the daily chart of Datamatics, I am seeing a steady uptrend ever since the stock formed an intermediate bottom around 630 level on 1st April. The stock has been in a steady uptrend, continuously making higher tops and higher bottoms. As of now, we are seeing the stock holding a strong support of its 50 DMA, which is around 820. And yesterday the stock had formed a strong bullish candle and reclaimed the 20 DMA as well. Technically, I think once the stock closes above its prior swing high, which is around 920, then we may see further upside till 1000 level. So overall, chart setup seems bullish, and I will advise to hold on to stock with a stop loss of around 800 level, and I expect a target of around 1000 in the short to medium term.
But let's move on to the rapid fire round. Rupesh, the first stock will be Naveen Fluorine. A very strong set of numbers coming in, and we're seeing a good momentum. Good time to take a little bit profits off the table, or do you think the momentum will continue in this counter?
I think the risk reward ratio doesn't favor fresh long positions in the stock. I would advise to wait for some pullback around 8,100 or 200, then maybe we can add some fresh positions.
Right. Next stock, Newland Labs, brokerages and the earnings both have been very strong. There's bullish views from them. Stock is up 7%. Is on the monthly charts at least. How does the technical levels look, Rupesh?
Yeah, technically the Newland lab is in uncharted territory, and today morning we saw a huge gap up of around 8%, and thereafter we are seeing some profit booking, which I would rather say it's sell-on news. Overall, the upside gap is still intact, and I would advise to hold on to the existing positions with a stop loss of around 19,000. We may see around 23,500 in the short term.
Right. Next counter, GMM Fowler. Is there any good risk reward ratio for a trade here?
GMM Fowler, I think it's run up pretty hard today. As of now, the risk reward ratio doesn't seem favorable. I would rather advise to wait for some pullback, maybe around 900 to 920 zone would be a better price to enter.
Next stock, IKS. Of course, they have a limited trading history, but numbers were largely in line. Street was expecting some higher numbers. Stock is down almost 6%. Good time to chip in and buy some, average it out if somebody is holding a position in this.
Yeah, definitely one can average it out, because it is now trading around 1740, which happens to be a good support area. So I would advise maybe average it around 1,740 and a stop loss of around 1,700. Maybe we can expect 1,920 levels in the short term.
Right, let's pull out the chart of Godrej Agrovet. Rupesh, is there a trade to be made here in this counter, or would you like to stay away from it?
Godrej Agrovet, I think it's pretty much underperforming the overall markets, and as of now it has reached its previous swing low of 540. So I would advise to stay away from the counter.
Right, and the next stock is Shelly Engineering. Let's get that stock also on the screen. Of course, stock is up 7% in trade. Some good buying happening. What are the levels one should be watching out for? Anything on the support side?
I think one can hold the stock with a stop loss of around 5%. Maybe it can show up swing of around 15% in the short term.
HUL, the next stock we are talking about. HAL is the stock. Let's talk about that. Sorry for that. Hindustan Aeronautics. Just pull out that stock. After a long time, the defense stocks are buzzing in trade, and stock is up 6%. Do you think this momentum will continue, because this is just the one spike which has come in after a long time?
HAL, sorry.
It's HAL, yeah.
Hindustan Aeronautics. Today's price action, we have seen the stock price crossing its previous swing high, which was around 4,800, and seems a decent swing breakout on the daily charts. So I think the upside can continue from here on, and it can challenge the June 2025 swing high of 5,080. So I think I would advise to hold on to the stocks, and if the stock closes above 5,080, then we can see the stock challenging its all-time high, which is around, I think, 5,520 level.
Right, and a quick view of the last stock, Saregama. Your views on that?
Saregama technically seems good. It is in a great momentum. As of now, the stock is just in a small correction mode after hitting a high of 570 yesterday. Overall, the chart setup is bullish. I would advise to hold on to the stock with a stop loss of around 490. Maybe we can see 600 levels in the short term.
Well, that's the end of the rapid fire round. Over to you, Hiral.
Okay, thank you so much for that. In fact, stay with us. Before we talk about any other stocks, Milky Mist IPO actually would open on the 11th of August with the issue size pegged at almost 1,500 odd crores. The price band is fixed at 133 to 140 per share. My colleague Nimit caught up with the management to discuss their IPO offering and growth outlook. Let's listen into a slice of that conversation.
The big question first I'll ask you is about the downsizing of your IPO. Of course, the fresh issue size is compensated from the pre-IPO clearly, but the OFS portion has also been halved. The amount of shares that y'all are selling, you've reduced by half. Wanted to ask, what was the thought process? Is this because the market, which is currently devaluing most IPOs that are looking to list, is this a market response, or is this also something that you internally decided that we'll pull back on what we're planning to sell?
Thanks, Nimit. You see, we have not downsized the IPO. You know, our IPO was the actual IPO size is 2,035 crores, and out of that we went for a pre-IPO. And pre-IPO consists of 357 crores of primary and 125 crores of secondary. So subtracting that, the remaining is 1,480 plus crores. And that is again 125 crores of OFS, which originally we put as a 250 crores.
Yeah, correct. So that's the only portion I'm asking about.
That's the only thing. Okay, so there is no downsizing of the IPO. Subtracting what we have raised through the pre-IPO round, remaining is we are going in. So we have not done any kind of downsizing.
So if I could ask only about the halving of the OFS that you have done, what sort of led to half from 250 you've gone to 125 on the OFS? Just understanding if that is a market response based on your road shows, or is that a discussion that you had internally?
No, 250 crores is the original OFS portion. Correct. Out of which 125 was already done with the pre-IPO.
Oh, okay.
And 125 is now being part of the IPO.
Okay, so there's no downsizing at all. It's purely to do with. Okay, perfect. Talking about the pre-IPO, you valued that very close to the price band that you're valuing today, which offers very little to no discount for the retail investor as compared to your investor Temasek. What is the reasoning behind this aggressive pricing?
See, pre-IPO is done at a certain level, okay, and that was. We continue with the same level of price band. There is no, kind of a deviation from that. So it is the same price band, we have come out with.
So there's no discount you thought about offering? Was there any thinking about offering any discount to the retail investors? Because it's essentially what the investor looks at is how much risk you're passing on to them. And often when the pre-IPO is at the same price as the retail, it's taken negatively generally. There may be another reason for it, which I'll ask you.
As far as Milky Mist is concerned, we have been growing at a 30% CAGR since last many years. So there is a high level of growth and the margins have improved upon. And there's a huge opportunities existing for us. So I don't see that becomes any kind of a constraint. We are at a better position as far as our technology and growth and the margins are concerned.
Okay. I also wanted to ask you about the issue we discussed a little off camera also, and that happened earlier this year about the paneer, the puffed paneer issue as such. Now, as you expand, you're very big in South India already. You're expanding increasingly into North India. You have a very strong supply chain and how you maintain safety. But since a lot of it goes through quick commerce now, and that segment is looking to increase, and I'll leave you to speak to that. But how will you maintain the standards that you maintain for yourselves in your supply chain externally to all your vendors and partners like these quick commerce companies? Is there a plan for that to maintain the quality?
The first and foremost quality comes from not from the supply chain and all those things, but having the right technology. It's very, very, very important. And as far as Milky Mist is concerned, we brought in the right technologies, completely untouched, the automatic from milk to product packing. Then comes the second portion, for that, we were the first company in the food segment to have end-to-end logistics, right from taking milk from the source, bringing it to the factory, and taking the products from the factory to the distributors, and again from distributors to the retail touch points. So we have a complete end-to-end logistics controlled by the company. At any given point of time, we know what the temperature at a particular place at a particular freezer. So we have beautiful controls. So that gives us a kind of an advantage to retain the quality of our products till it reaches to the consumer level.
But I wanted to ask, so that's exactly my question, right? So now a lot of this will not be controlled by you if you are giving it to the dark stores and the warehouses that the quick commerce chains operate, a segment that's growing very fast. How will you ensure that quality control when you pass it on to them, or then is it their responsibility? Because the product that's going out is finally yours.
See, end of the day, the product is manufactured by Milky Mist. So it is the primary responsibility comes to us to ensure that the supply chain is maintained till the product reaches to the.
So any specific plans for that?
No. See, we our partners, Quick Commerce or Modern Trade, we have been, it's a two-way processes that educating their requirement and our the requirement as far as the product storage. We keep dialoguing with them, and they keep creating the facilities, and maybe. Since some of the portions are growing much faster, there could be a little bit of one or two cases here and there, but we ensure that every consumer who's getting Milky Mist product should get a same quality as it was manufactured in the plant.
That's an interesting take coming in from the management of Milky Mist. And there's a correlation also, the next stock I'm talking about is this Swiggy. Of course, you can order Milky Mist from Swiggy as well. But Swiggy has also come out with its Vision 2031. Mahima, there's an overhang with the management, that's fine. But what is this Vision 2031 for Swiggy?
So tall targets, Shah, that they've given in their investor presentation. They have their analyst meet today, and that's and on the back of that they've set out a presentation and set out their vision for FY31 for major metrics. Firstly, EBITDA, adjusted EBITDA is what they're talking about here. Targets of 10,000 crore by FY31. I think this is the number which the street has liked, and we're seeing that the stock did react to that, but it's cooled off now. But gross order value is something which they are expecting to be up by 30% to 2.5 trillion by 2031. The other aspect is food delivery gross order value to grow anywhere between 2.5 to 3.5 times by FY31. So that's a good jump that they're expecting for the food delivery business, considering that to a large extent food delivery business now is started to consolidate. Instamart targets over 1.5 trillion gross order value by FY31. So these are the four major targets that Swiggy has laid down for the roadmap to 2031.
It seems like market is taking it with a pinch of salt. These are all these 5-year numbers. So that's something which viewers should look at. But Mahima, stay with us. There is an important earnings also coming in. Trent, what's the preview? What are the numbers looking like?
So for Trent, generally for the revenue number, they already give it in their business update, which came in at 19%. We saw the stock tank when the business update came out because it was below expectation. EBITDA, the expectations are that it could rise slightly above the revenue, so around 21%. And the margins are expected to be around that 17.8% versus that of 17.5%. So a little improvement in margins you can expect on a year-on-year basis. And PAT may see a growth of around 25%. So cost savings and operating leverage could play out and show better performance in terms of fair bottom line goes. Revenue growth, like I said, at 19% was below what the street was expecting. Growth less than 20%. This is the 5th quarter where they've done that. And West Side store addition was also on a disappointing front. So an explanation probably around that is also something that we'll be watching out for. Increasing competition and impact of cannibalization is also something that we'll be watching out for as to how that's panned out, and that will overall see an impact on how same-store sales growth and revenue per square feet trends look like. So this is the overall view that how you can expect trend results could be and what we'll be watching out for.
Thanks a lot, Mahima, for that. It will be a busy day for you. But just a quick technical check, either Swiggy or Trent, either of these two, Rupesh, which would be a good technical pick?
Good technical pick from my side, I would prefer Swiggy. Because in early June, we have seen a good bottom formation in Swiggy around 240 levels. And ever since the stock has started forming higher tops and higher bottom, and every upswing is supported with a healthy rise in volume. around 4 crore to 6 crore shares are traded on every upswing. So definitely I would prefer buying Swiggy around current levels, keeping a stop loss of around 260, and one can expect a decent target of around 325, which is the 38.20 Fibonacci retracement of the entire fall from the high of 470 to the low of 230.
So Swiggy is the pick coming in. Thanks a lot, Rupesh, for us, and best of luck for the future. And that's the end of the show, folks. From me, Hiral, and the entire team which put together this wonderful show of trending stocks. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
बरसों से सरसों।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
पीओके के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
What if hearing loss is doing more than making conversations difficult? What if it is silently affecting the brain?
The big scientific link we focus on today is untreated hearing loss, now identified as one of the strongest modifiable risk factors for dementia.
Join us as experts separate myth from facts and explain why listening better could mean living better. Only on NDTV Profit. What if your gut was affecting more than just your digestion, your mood, your sleep, even your immunity?
The gut-brain connection is no myth, it's a living reality.
This week on NDTV Lifeline, discover how your gut influences your mind, why bloating and stress are often connected, and the simple habits that can transform your health. Only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first.
Well, hello and welcome to NDTV Profit. Today's special chat that we are trying to do is based on SEBI's new closing auction session, or as it is popularly or unpopularly known as CAS. And the reason I reserve my comments on that, because the street is split right down the middle. If you've been clutching your phone or glued to your screen during the last few minutes of trade this week, and I know Alex is, then this show is for you, because this new closing auction framework could change, or you could argue has changed, how those final minutes play out. And before we tell you what you need to know and what the changes mean for you, Alex, has anchoring become different in the last 15 minutes?
I must say that it's been a while, and Neeraj, you've been anchoring market related shows and live markets for far longer than I have. But having said that, it's been a decent amount of time. This week I've actually been flummoxed more than once.
No, what I meant was just this, that has this closing show the last 3 days, has it been different?
Oh, for sure, because and especially on Monday, because you were scratching your head thinking, how the hell did this happen? You have a closing at 315, which is supposed to be the reference, and suddenly 200 points on the Nifty 50 up, and then you try to understand, oh, okay, this has happened, so bids have been placed and they've actually gotten accepted at that higher level, and so therefore the components of the Nifty 50 have gone up. These are the F&O stocks, and those are the trades that have taken place. The price is settled at that level, and as a result of which the Nifty 50 itself has gone up by 200 points, and you're trying to scratch your head to think, oh, okay, this is what has happened. Why has it not happened for the Sensex? Obviously because turnover was not there. So therefore you're trying to figure out all of those modalities. It happened yesterday as well. The gap was not as significant as it was on Monday, but there was still a gap.
Yeah, so a few large orders effectively can change, and right now when the number of people participating are less, it is more and more evident. Will it change though, is the question, because in some sense SEBI's introduced this because this is acceptable, or it is a practice that is done in a number of countries as we get to know. And therefore, to talk about that, let's get in our experts. And Mr. Venkatachalam Shanmugam, who is a partner at MC Cube, if I'm getting it correct, and Mr. Kamlesh Shroff, who is the national president of ANMI, which is the Association of National Exchange Members of India, join us right now on the show. Thank you so much, gentlemen, for joining in, both of you. And Kamlesh, great talking to you again. I think we're talking, less than a month, and so good talking to you. And Mr. Venkatachalam, thank you so much for joining in. I hope I got the name pronunciations correct. Please excuse me if I didn't.
You are very right. You can call me Venkat. That's fine.
Okay, great. Venkat, thank you so much for that. Okay, so let's start with this. And Kamlesh, for a lot of people who are grappling with this question, why is it that this has happened in the first place? And one of the answers is that maybe there is better price discovery, maybe also because it's a system that is used in a lot of countries across the world. Would that be a fair assessment, or do you think there are something additional to add to this?
No, absolutely. You kind of said it on the spot. It's mainly because most of the global markets function on this cash system. But of course, each market is different. So NYSE, LSE, Hong Kong, some of these big markets actually take the cash system, which is the closing auction session, and has worked well. But I'm sure I've read it somewhere that the initial hiccups are also there in these markets too. So the rationale is, whenever a new mechanism, comes in, there is some sure learning which is natural, and participation generally grows over time, and then you get a little deeper, markets which discovers the right efficient price.
Venkat, weigh in on this, and good afternoon, Alex here. There have been so many interesting notes that have been written already, and I'm curious about what you think. Kamlesh has rightly pointed out that this is followed in several markets, mostly developed markets with significant participation and quite a large amount of depth in the passive flows as well, right? But here it's been purported to say that we don't have enough institutional participation for it to be a success. What do you think?
No, I would put it the other way, actually. So they are actually checking how the mechanism is working and what role that we can play. So end of the day, everyone is sitting here for profiting from the trades that they can do. But this is actually a closing market session, right? So actually, because this is a closed auction system, it shuts away the quantitative players, actually, right? So they don't have any larger role in terms of playing in this particular cash process, actually. So the people who would like to or would mandatorily participate is those passive players who are passive funds in the ecosystem who would definitely want to be part of that. But they may come on mostly on the buy side, but sometimes on the sell side as well, actually, when there is an index rebalancing happens and things like that, actually. So having said that, we will have to strengthen the counterparty system, right? The counterparties who come against these passive funds, which is very critical.
Okay.
Okay. We give some time for the market platforms to get it settled down. Yeah, sorry.
Yeah, well, we lost a little bit of that simply because I think Venkat is mobile right now, and hence maybe some bit of frequency issues. Kamlesh, a quick check. I mean, all of us know a trader, a broker here, there, etc. And in the newsroom, we were talking to a few before this show and asking them. And one curious feedback or one curious response to me was that, and the person was Gujarati, and he said, "Ke Sawatan pachi dhandho j ban chhe." He was saying that there is no business, virtually no business relative to what used to be now after 315. Is that one, do you reckon it's a very isolated case, or could it be true for a lot of members? Part one. And part two, will this last, or will this even out as teething issues go away?
So number one, बात तो बराबर छे, धंधो बंद छे. So practically 915 to 315 is the market, and thus you would have seen the kind of volumes that the cash market is actually, the CAS, not the cash as in cash, but the CAS market has generated. Day one was 1200 crores, I think, at the NSE, 1550 crores at the day two, which was yesterday, which is being an expiry day. Gaps have narrowed down, but tremendously low, 8 to 10 crores on the BSE FNO. I think somewhat similar, maybe lower yesterday. So considering these things, the participation is seriously low. Can things change is your second question. With awareness, yes, it can, but it's going to take a little time. Most people thought that, it's about a 6, 8, 10 days pointer, and then we will move on with people participating. So participation comes in with prices, because the biggest mover is the prices. Every trader, every person on the screen is as an old adage goes, bhav bhagwan hai, as Rakesh ji had mentioned earlier, and that's exactly what everyone looks at. Prices are the most efficient way of looking at it. So if there is anomaly, not that people will not come back, so they will also start moving in. But because the session has a lot of things which still needs to be understood, a lot of people don't even know that 315, the migration from continuous trading session goes on to a closing on day one, goes into a closing auction session. Then from 320, you can actually put in prices, quotes up to 320.25, and you can delete them also. Then post that, anytime between 320, 330. Of course, this is kept very well so that you don't kind the smart batsmen don't just come in at the last minute and hit a 6 by a big trade and change the pricing or influence the closing price, which is fair. So this is an understanding aspect. I took a little long, but that's what the point is. So I think as people understand, as people get aware, things would change.
Okay. Venkat, I want to read from an interesting note that was put up by Zerodha's Nitin Kamath on X. And this has to do with the whole participation angle, right? I'm reading and it'll make quite a lot of sense because it's a well-written piece. Closing auctions work well when there is a deep liquidity and a large diverse ecosystem of market participants, including market makers and arbitrageurs. Whenever prices diverge between the cash market, futures, ETFs or different exchanges, participants step in and arbitrage the differences away. This ability to arbitrage is much more limited in India. And his contention is that's partly because it is impossible to express a short view in the cash market. Is this therefore a problem that is not necessarily going to be easy to fix?
I would tend to differ actually. See, basically, as I was mentioning to you, who are the mandatory participants? The mandatory participants are the passive ones actually, right? And then you have to find the, the sellers is the problem. So let's look at like, what's the passive fund flow that happens every day. So like we saw that in June, there is a passive fund flow that happened on an average around 550 crores actually. So these are the guys who would come and participate in the CAS, which is net inflow, right? So they would net buy to around 550 crores. But if you look at the NSE volume during CAS, which is around 1,000 crores, and on each of the last 3 days actually, which shows that there are people who are participating on the opposite side actually, but need depth. Depth is what would be required actually. So what is required is it's not a continuous price discovery mechanism. It's a closed auction mechanism where people would have to know the mechanism, how to put the trades, and what are the implications of the trades that they are putting in. So that's where, as Kamlesh ji has mentioned, we need education and awareness of the participants as to what role that they have to play.
I want to weigh in on this because the suggestion and ultimately it is described to say that unless you have this ability to short, which is unlikely to come through, there is bound to be a structural upward pressure in the markets, which is what we've witnessed in the first two sessions in the week. Kamlesh, that's for you.
Oh, okay, yeah. So yes, of course, and be cognizant of a fact also is that the STTs that are levied at the exchange transaction charges and all put together is quite a cost. So basically, if you are actually getting into an arbitrage of delivery, you should be cognizant of the fact that both sides deliveries plus the futures cost is quite a component for anyone to move in for the next small part of the portion. So our system also works in a way, the tax part of it works a little against higher liquidity in a cash volume.
Okay, fair call. The other, since we are trying to figure out now what to do now that the system is here, and from the looks of it, from all that we've gathered, SEBI is in no mood to change this right now. This is here, it's possibly here to stay, and people will have to work around it. Two things that have happened. And Venkat, I'd like to come to you on this. One observation is that a few large orders can move the price a lot in those 20 minutes. And if the participation stays low, that could well happen. And in some sense defeats the primary purpose wherein people were able to take the prices higher in concentrated ways in the earlier system. So does this get resolved, or does this only get resolved after volumes pick up meaningfully?
Okay, so here, I would want to fundamentally explain what is the closing prices in here in this market and in the continuous trading system, right? In the continuous trading system, you have at 328 one price, 328 some seconds another price that is coming up with a volume, and that is actually multiplied with the price multiplied with the volume. Then you come at an average price actually. So what is a volume weighted average price? Is someone is a price achieved exactly except for a handful of few who had participated in the market. Here is the market which tells you what is the price that you want to pick, depending upon whether you are on the buy side or what the larger market sees in terms of everybody matching the trades, or maximum of the people matching the trade says actually this is the price, and that is the price people would want to pick it up actually. And there are people who are willing to pick it up at that price at which the market is closing. I would say that that system is not manipulatable, and not manipulatable to the extent that the previous VWAP system was there actually. There is a scope for a little bit of a manipulation, but all of this would be fine-tuned over a period in time.
Yeah, Venkat, sorry, I was not even referring to this from a perspective of manipulation. I'm just referring to it from the purpose of what the end result is. If the end result, one of the key reasons was that in the continuous trading system, prices can be taken higher via some strong players. Here, the larger bidder can influence the eventual price, right? So in some sense, how do you resolve that?
Yeah, so that is because, liquidity is not there. So we need to bring in the liquidity.
Exactly.
Yeah.
Okay.
Yeah.
So that's the point. The other point, Kamlesh, and Venkat, thankfully, thank you for the answer. The other point, Kamlesh, is that we don't know if the liquidity difference between the Sensex or the BSE and the NSE will change. And currently, there is an issue there because the Sensex and the Nifty are moving in a different direction because the stocks within there are moving in a different direction. Will arbitrage opportunities at some point of time reduce that difference, or is it difficult to call that right now?
No. So arbitrage opportunities will definitely settle those differences. But yes, this is a problem because both the indices are either, both these indices total volume should be somewhere that the closing price should have a clear mandate that it is average in the sense, average of the cash which is traded on both sides, and then you devise the closing price. Whether that's a possibility, I don't know. But if that is, at least you will get a little better. So what an average of Nifty is in volumes and the Sensex may have a little lower, which is almost 1:10. Then that average price has to be considered, which will bring down the spikes. That's the way. But currently both are independent. In indices, both indices have their own constituents. So what you just mentioned, so a large trade can actually change the equilibrium and thus the price. And the input price of those 30 stocks or the 50 stocks actually goes to make the final closing index. So clearly the answer is yes. If the volumes are lower, a large trade can affect.
The other issue that has been spoken about, Venkat, and let us know what you think about this, right? And we've spoken about the fact that it's used in other markets, cash. But in the US, and I was reading another piece that was put up, you don't have a stoppage of the continuous trading. It continues alongside the cash. Whereas in India, it stops, the continuous trading stops at 315. And so therefore, you have on the chart a flat line, which makes trading in derivatives difficult to do. So is that something that needs to be looked at?
I would say that, so the FNO markets are trading on the probable cash price in future, right?
Yeah.
So that the FNO call, right? So why would they be more concerned about what's going on during the session? Because you have enough of information about the fundamentals of that particular stock, and the only thing is you are not getting the signal from the underlying market actually. So I believe that they are blindfolded for about 25 minutes till the closing price is announced actually. That should not stop them from trading at all actually. So that's an initial reaction, but as the time passes by, they will also come to know how to trade and what to trade.
Okay. Kamlesh,
I hope I've answered your question.
Has he answered your question, Alex?
You've done your best, I can say that.
Okay. The broader question is this, gentlemen, and I would love for both of you to answer it. We're going to get in a dealer who's right in the ring, doing this day in, day out to try and understand her experience as well, right? But the key question is, presumably, SEBI's done this because closing prices were easy to push up or down with the big last-minute trades. Global markets already use auctions for closing prices, and index funds and big foreign investors wanted a clearer picture. Is it to the disadvantage of some of the local participants or not? Both of you, Kamlesh, starting with you.
So yes, it is a disadvantage because we don't have the liquidity, and as I mentioned, as long as you don't have the liquidity, you don't have the markets. So if liquidity grows up, this is a much evolved system, but it's just a matter of time if it does. If it doesn't, then we will have to tweak a little and probably keep the same system and then work some solutions around it.
And Venkat, I know maybe you would say that I've said this for the last 20 minutes, but just reiterating the point, do you think local players are at a disadvantage, institutions? Because there are a few who are saying that local institutions, arbitrage funds are not able to participate and therefore they are at a disadvantage. Are they?
No, so I forgot to mention this point out to you. Actually, if you look at the arbitrage funds, actually, in the last 2 days, they have earned about 6% to 7% as a return in the market. Actually, so that basically some of them could be from the cash session that happened and their participation. And as I said, if 550 to 600 crores is approximately the net inflow, obviously there is someone with about 600 crore on the opposite side, coming up, and then selling it actually. So I believe it could be the arbitrage and similar institutional players who is coming into the market and providing that liquidity. So the point is actually, if you're looking at from a larger market perspective, this market has about 80% of the volumes which is coming in from the quant traders and those who take technicals and trade. For them, they only get to see a price and they can't get that price by an instant trade that they make actually. For them, this will be a difficulty, but they will have to adjust their trading strategies and everything. As Kamlesh ji said, you are losing that 30 minutes.
Yeah, water finds its way, but no, market doesn't, because the price still has the ability to change, so it could become a problem. But yeah, gentlemen, both of you, thank you so much for really taking the time out and going into great detail with this. And like I said, we're getting an actual participant who sits in front of a dealing terminal every single day. She heads the sales trading desk at MK Global Financial Services. Manjari Mazumdar joins us right now on the show. Manjari, thanks so much for joining in. Excuse me if I've given the description wrongly, but you would be best placed because you've seen the before and you've seen the now over the last 3 days. Are you a happy participant in the current closing auction session, or do you believe that there are some chinks in the armor?
So I think the framework is really very good, and the way I look at it is we have to go that way because that is where the entire Asian markets are. Every market has closing auction. So the framework is very good. Yes, liquidity is a problem, and that is what I think we are facing for the last few days. But these are small issues, I think, which will even out over a period of time. I think it's just question of next 10-15 days when these things will get evened out. Definitely, there are certain concerns because when we look at other emerging markets or other Asian markets where closing auction is there are around 2-3 things which are very important. One, they don't have weekly options. Second, they have an extremely developed SLBM market. So, because of which the closing auction price variations don't happen in that markets. Right now, we have weekly options on indexes, and we even have expiries where physical deliveries happen. So these are the two very big concerns right now for Indian markets with closing auctions.
Okay, Manjari, so therefore from that perspective, liquidity is something that everyone's spoken about. But are there any other tweaks that you think need to be brought about? Because there are several that are being circulated at this point, and as we understand it, brokers have met with the regulator. In your opinion, what needs to be done to make this more palatable, more efficient?
So if you look at it, around 3,34,000 crore is kind of an arbitrage fund which works in Indian markets, and these are the participants who just can't participate in closing auction because they are liquidity providers for the market. To a great extent, they have to simultaneously do both the legs, and with cash getting closed before and FNO still continues till 340. They somewhere can't participate in this, and that is where I think that is one little problem which happens because of the liquidity issues happening there. Again, this closing option is extremely good for the passive funds which needed. So whatever you do, the VWAPs will never be able to match the closing price. You can never match the VWAP because generally the way it was happening earlier, in last half an hour, you can have a big trade which comes in, and that would change the VWAP price altogether. So you at no point of time you can actually match the weighted average price on which the indexes used to close. So closing auction is a good move, but the price variation and liquidity becomes an issue there.
Yeah, it's a good point that you raise. And we've seen the way that closing NAVs for arbitrage funds have also moved. It's quite interesting to note. So these are, I guess, you can call them. You have a point.
I have one final question,
please.
though, and Manjari, which is simply this: that if you could, if the SEBI chair was listening right now, and if you could recommend one tweak or one change that should be done to this to make it more efficient. You've spoken about 2 or 3 in response to this. If there was one key thing, what would that be?
One key thing I would look at is maybe to a certain extent little bit narrow the range because that can little bit help with the massive volatility. I think it's very interesting. I would like to point out that today's BSE expiry, weekly expiry.
Yes.
And the option sitting today as of now is around 8 lakh crore notional on weekly options. And if you look at last 3 days closing auction volume on BSE is 10 crores. BSE, the entire day volume is 10,000 crore and last 15 minutes volume is around 10 to 12 crore. Today it might be 50 crore, but a 50 crore volume is going to define 8 lakh crore of closing. How can you actually manage this? How can we even think about it?
Yeah.
And the kind of price variations which are happening. So the most important thing which we have to look at is that we have physical delivery of futures during expiry. So you will have a lot of options which you think will close in the money, but they happen to close out of the money and you don't have stock to deliver. Right?
Wow.
That is a very, very big problem. So overall, if you go to see during the weekly expiries or even during monthly expiries, you have straddles which used to have a time decay and they used to come somewhere around 10 to 15 bips of the spot. Right now, the straddles are trading at 80 bips. There is no time decay which is happening, theta decay which is happening because it has become a black box where the expiry will come.
That's
That's one way to put it. All right.
It's like a dark room with your eyes blindfolded. Yeah.
So I'm still not able to understand how a 10 crore or even in NSE, if you go to see the closing auction volume was 1200 crore.
But what's the way around this, Manjari?
Yeah,
what's the way around this?
I think we need to have a very strong SLPM market which gets developed before we actually get into this, because till you don't have volumes, you really can't play around with expiries, because the F&O market is 100x of what cash market is.
Yeah, that's true.
So, and as far as someone pointed out on arbitrage funds, I just wanted to make a note on this. The closing price. So when the arbitrage funds NAV is calculated, you look at the closing price of. So arbitrage funds is definitely they are long stock and short futures.
Yeah.
Now, if your NAV gets mapped to long stock, which is closing at around 90 bips higher compared to futures, you will always show a gain of 70 to 80 bips on arbitrage funds, but that's not something which can get realized. Because your cash price is getting closed on your closing auction price, whereas futures are not mapping the closing auction price. The futures are absolutely trading where it was trading at 315.
Wow.
And that is a price variation you will see in weekly options and monthly options. So, like last weekly expiry of Nifty, you will see that the weekly options were random.
True.
But the second week option and monthly options were actually trading at a price of 350. They were just not moving.
Manjari, we invite you to the studios. It'll be great to do this maybe a week or 2 weeks later, wherein we can actually make a set of problems currently with this system and what the simple solutions could be. I mean, the whole SLBM system getting developed is probably some time away, but be that as it may, at least there are simple solutions. But it's fantastic talking to you today. Thank you so much and giving us an experienced hand view of what is currently going on. Really appreciate your time.
Thanks a lot. Thank you. Nice talking.
Yeah. Our pleasure entirely.
All right, Alex.
So for somebody who's getting a front row seat to how this is working, right?
Exactly.
That's the real problem.
That's the real problem. We wrap it up on this leg of this special show. Thanks so much for joining in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit. The Nifty continues to remain largely flat, not much of a movement. On the sectoral side is the Nifty PSU Bank Index, which is up nearly 1.4% in trade, followed by Nifty Small Cap. On the losing side, we have the Nifty Real Estate Index, which is down around 1.1%, followed by Nifty Auto, which is down around 1% in trade. Nifty Metal, that's down around 0.8%. But one number that has come on screen, the Nifty number, trend. Now, if you look at the revenue, it has come in at close to 5,666 crore. The EBITDA number, that stands around, I believe, the EBITDA number stands around 1,110 crore, largely in line with what the street was expecting. In fact, 100 crore beat on that front. Margins have come in at close to 19.6%, and that's a strong number actually on the EBITDA front. But let's listen into what the Biocon management has to say on their Q1 earnings.
How would you actually decode the first quarter in terms of what has worked and what has not worked?
Thank you, Hiral, for having me on your show. Always a pleasure, like you said. This is a resilient performance, is what I would say. Very strong. The first quarter after we integrated the biosimilars and generics business. So it's an important quarter for us as we put these two businesses together. What you're trying to integrate is two businesses where we wanted to see the operating synergies starting to play in. And that's what you've seen in the numbers. Strong, robust growth on the top line on both biosimilars and on generics, which was very good to see. A focus on profitability, which was something very important to make that turnaround that we were focused on. And a very clear signal to see that the lowering of interest costs that we were expecting to see, which is all translated to the bottom line, and hence the 4 times increase in the profit that was reported. So I would say a very strong start, but I would refrain from going that far and say it's a resilient start, and then we'll get progressively better as we get through fiscal 27.
Right. Shreyas, absolutely point taken, with regards to biosimilars and generic business growth as well. However, a couple of points that have been highlighted on the negative side, which would be great to get a clarification from you as well for the investors, is the research service business that has continued to remain weak. When are you expecting a turnaround over there? And in terms of revenue contribution and the strategy that you have there, how are you looking at it?
I mean, what's a conversation if there isn't something that makes the other side look better? So I think it's important to first note that the biopharma business contributes a sizable chunk. It's an 83% contribution in the overall Biocon umbrella. The research services is less than 20%. It's around 17% this quarter. A small part of our business, but a significant one. Syngene's really had a tough quarter. We've talked about it as Syngene went through their earnings call. They are in a bit of a rebuild stage, like their executive chairperson talked about. They've lost their way, as she said in her words, and they're in the process of rebuilding that momentum as it actually gets together to a stronger second half as compared to what they are seeing in the first half. So a new management team in place, new leadership team, focus on doing what is good for the business. I think getting the basics right, just like we've done in the biopharma business, where the generics business had a similar challenge, where we were required to focus on the basics. And I think what you're starting to see is that turnaround. So I would expect the services business also to start showing that turnaround towards the later part of this year.
Okay. The other thing that I want to talk to you about is the higher OPEX, the depreciation which has been higher, other income has been lower this time around, and the company has actually recorded a net tax credit during the quarter, because if that was not there, the miss on the PAT with regards to what the street was estimating would have been much higher, right? If you have to summate all of these 2 points and give a reference point as to what's going wrong there, and is there any, I wouldn't say course correction, but is there a trajectory that you're looking at on these metrics?
Yeah, I'll probably categorize it slightly different than what you've done, and probably consensus estimates to where we are is not too far in terms of where we've been clearly on the biopharma side of the business. Syngene, probably there was a little bit of a disappointment in terms of what was guided and what actually turned out. And that was discussed at length when Syngene did their earnings. And since then, I think there's been a while before we've reported numbers as a consolidated Biocon. But there's probably been very limited deviation in terms of consensus expectation to what the biopharma business was expected to deliver. 2, 3 important metric that I would draw your attention to is one of the key things that's happened is interest costs have trended lower than before. So if you were to even account for the rupee depreciation, those costs have trended from 280 or to 210 in that range from crores. And that's when you have a dollar denominated debt payback and you're looking at it from a rupee lens. So that's an absolute reduction of almost 22%. So there's clearly a reduction year on year, which we had projected. We are saying that there would be a 300 crore drop in interest costs, and you would start seeing that. And that's starting to play in the numbers. So that's number one. The other metric you talked about was depreciation. And as we capitalize facilities which will play through, you will see some of these costs come in. And which is why the focus on the generic side, which is where we had built some facilities in anticipation of demand, the focus has been in greater utilization of these facilities on a profitable supply of products. And that's what you're starting to see, which is why the generics profitability has turned around significantly from a EBITDA margin, which was significantly lower to what you're seeing this quarter. So I think the key metric, whether it was on the interest cost, the depreciation, or whether it was on the operational occupancy of some of the capital which was unutilized, I think has started to make a change. Now, I want to remind you that this is still the first quarter after we've integrated the business on the biopharma side. So things will progressively get better. Just to see that in the first quarter and to see things move in the positive direction, I think is a good sign of things to come.
Absolutely. Shreyas, biosimilars and US markets. Now, North America does remain the largest market. So how are the dynamics in terms of pricing evolving when you talk about biosimilars? And are you seeing any signs of competitive intensity there?
Yeah, I mean, I would say pricing is always an outcome of competition, and you would see that, and we've always welcomed it from a very early time. So we're not really looking at competition being a deterrent in that sense. Now, North America, from a mix perspective, we've always been very well geographically diversified in terms of our business. We used to be 40% North America, 35% Europe, and 25% in emerging markets. And this keeps changing a little bit. If you look at this particular quarter, growth was driven by sales in North America. So that 40s moved up to 45 this particular quarter. And as a consequence, you've seen Europe drop from 35 to 32 and emerging markets at 23. So you would see these internal redistributions a bit on a quarter by quarter basis. And as you see new launches, which we've talked about, again, we're very confident in terms of how these new launches will play out. You could see the North America region contribute a little bit more than what the other regions have. But then as you look at it over a longer window, they would tend to kind of settle down in a well-diversified manner.
I'm sure, yeah, the street is watching out for, the traction with regards to Bosaya or Kelso as well as Yesafili. But, now that the business is moving towards higher margin biosimilars, which are gaining share, right? Is there scope for further margin expansion, or do you think increased R&D investments could actually offset those kind of gains?
Now, first up, I must compliment you for pronouncing those tongue twisters, and those are not easy to do, and that was well done. I think the important thing is, as you bring in new products and you launch them into high margin geographies, you expect them to improve your EBITDA contributions, and that's a fair expectation, and I think that will happen. It will also then offset some of the price erosion that you also expect to see, because when competition builds, like I said, pricing and margins are an outcome of competition, and that will happen. So legacy products will see price erosion, and new product launches will help offset some of that. Now, your question was on pertaining to whether R&D costs will increase, and that this will help offset that. We've always maintained that R&D costs, or R&D investments, as we call them, would be in the region of 7% of revenues. And as revenues continue to ramp, and they've ramped up double digit in the past few years from a CAGR perspective, there's a sizable investment we've continued to make in R&D. So we don't see that 7% change significantly to move between quarters. But on a full year basis, 4-quarter basis, you would find us probably in the same range. So it's unlikely that we will see that changing significantly, and certainly not likely to have an impact on our overall expectation of a mid-20s EBITDA margin.
Well, Westside came out with their numbers. Let's get in Mahima to understand how the quarter has been for Trent.
So, Somit, overall, if you take a look at the numbers, revenue numbers, of course, we knew at that 19% growth at that 5,666 odd crore. The stock did touch an high of interesting more than 3% and has come off significantly off the high point of the day. But if you take a look at the numbers per se, prima facie, EBITDA is a beat. PAT is also a beat in terms of where the numbers go. Your net profit has come in at 532 odd crores versus that of an estimate of 501 crore. In terms of EBITDA, the estimated number was 1010, but it's come in slightly better at that 1110 number. And margins is where the real beat has come in from, because that has come in at 19.6% versus that of an estimate of around 17.5%. So, overall, prima facie EBITDA and PAT numbers seem to be, slightly ahead of the estimates, but I think the fine print could be in the numbers in terms of like-for-like growth for fashion portfolio was in low single digits. That's something probably that the street is not like, because when the numbers came, the stock spiked. But post the presentation, this low single digit growth in terms of fashion is something that probably the street is not liking. The emerging categories, including beauty, personal care, innerwear, footwear, have contributed around 21% to the revenues. Zudio 22 stores were opened and 3 consolidated in the quarter as well. And Westside is where we also talked about this in Q1, that the growth, the store growth was not up to the mark, and that is why we had seen pressure on the counter. And that could also be one of the reasons as to why we're seeing the stock tanking as well. So this is the first cut of as to how trend numbers have panned out, but the stock has come off significantly from the high point of the day.
So weak store addition is the reason why the stock has declined from the day's highest point, now down around 1%. But from the day's high point, if you look at the stock, is down nearly 3 to 4% in trade. But moving on to the new kid on the block, Shiprocket is in focus after the company's IPO is around the corner to open for subscription. My colleague Nimit had an interesting conversation with Sahil Goyal, the Managing Director and Chief Executive Officer, and Tanmay Kumar as well, the CFO of the company. Let's listen to the bite.
Sahil and Tanmay, thank you for taking the time. Congratulations. It's been a long journey for you all since it's been over a year that you've been planning this. I'm sure it's longer that you've been planning this. First, let's address the elephant in the room. You've had an OFS cut about 30%. Market experts say that the valuation cut is also about 30% approximately. Was this a sort of public market reset in terms of your valuation and your OFS cut? What happened there from 2025 to now when you're going public?
So, fair question. I think when we think about our company, right, what is our focus? Our focus is on building a business, right? Valuation is a market outcome, right? It depends on what the investors value it as, right? And private valuations work differently from public valuations. But in the life of a company that is thinking about the next 10 years, this is just a sort of a step, right? And our company is cash making, correct? So for us, it's not like we need the money to, necessarily, we're not burning money as a company. So I think for us, it made sense to basically, optimize for the quality and for the long term, right? And the market discovers the price.
So when you went through your roadshow process, you didn't see any sort of, like the market is generally seeing, there's been a public market rebuke of large valuations. It also depends on how you place yourself. You're somewhere in the middle of a physical carrier logistics company and a technology company which you're pivoting towards. How did the market sort of see you? Do they look at you as a tech company? Do they look at you as a logistics player?
See, we have no assets, right? So if we are enabling logistics along with a bunch of other things for our merchants, that is what we are, right? So people can put whatever label they want, that's up to them, right? But essentially we are solving problems for our merchants, right? And there are over 200,000 of them, and in India there are like 6 crore of them. So I think the point is that labels change with time, right? Because anything which is new can be boxed into whatever people can understand today. But in reality, we don't own any assets at all, right? So we integrate into existing supply, right, and make it possible for the small merchant who otherwise was not able to do it. So that's what the company is focused on.
So how do you place yourselves then? Because if you look at your RHP and your financials, your about 75% of your revenue still is tied to your physical delivery, right? 25 is coming from your emerging businesses and the new products that you're launching as a software company. Now there are two sets of markets there, right? You're a logistics enabler, of course, not exactly what the shadow faxes of the world are doing, where they own their own assets. Also not the unicommerces of the world, which are pure play SaaS AI products. So how do you place yourselves there, and how does that growth look going forwards? Are you going more towards the 25%, looking for that to grow, or are you still going to be anchoring on the 75%, which is your physical logistical support delivery?
See, I think it's all one transaction, right? So somebody orders something online, they have to run an ad as a merchant, then they have to process a order, and then they have to ship the order, correct? We started with the shipping part, and then over time found that the merchant was having problems across the value chain. That's how the core and the emerging segments have arrived. So, to kind of think about how this happens over time is a function of how merchants start to consume the services, right? So it's difficult to, try and put a number here, because it's one set of orders going through the system, right? And the merchants have problems across the stack. And we started to solve upstream in the stack in the recent years.
Well, shifting focus to another small cap counter, that's SEPC. Now they have announced an order win of nearly 855 odd crore rupees. Now that's quite odd for a company which has a market capitalization of 1,000 odd crore. So what is the size of the order, for what time period, what does it mean for the company? Let's get in path with more details on the same.
Well, the stock has gained over 10% in the last 2 sessions and has touched the highest level in 22 sessions, and that is because of that big order win. They have won an order of 854 crores from Steel Authority of India. The biggest thing is that this order equals to almost 70% of their market capitalization. It includes the civil and structure works for sales pellet plant for their 4.08 MTPA capacity expansion work that they are doing. This order will be executed over the period of next 32 months. If we talk about the financials of SEPC in FY26, their revenue had crossed 1,000 crores for the first time. Also, their PAT has more than doubled in FY26. Their order book stands at 10,000 crores, and management had highlighted record inflows during FY26. So now with SAIL becoming a key client for the company and their expansion plans in Abu Dhabi as well, let's see how quickly they are able to execute this huge order book.
Right. Well, moving on to Arun, let's get in the executive chairman and managing director of Wonderla Holidays. Sir, firstly, congratulations on a strong set of numbers here coming in. But my first question to start off with you would be on this quarter was led, I believe, by the Chennai park performance. But how can the Chennai park performance sustain going forward?
Thanks for having me on the show. Yes. Chennai Park for us did about totally about 45 crores of revenue and 2.5 lakhs of footfalls in the first quarter, and we are expecting that that's a very strong start for a new park which is barely 6 months old, almost beating our oldest park in Kochi. So we are very bullish on Chennai, and